2026. It's just been a phenomenal run. Is that the ongoing diversifier of last resort that you can keep on counting on?
As we saw sovereign investors move away from U.S. Treasuries, they put their money someplace else. A lot of that in 2025 was in precious metals, in particular gold. That will continue as again, going back to the Danish pension plan, where investors are looking for alternative places to recycle dollars, and they're going to be trying to find stability. And gold has been a tremendous performer and should expect to benefit from this level of uncertainty that's in the marketplace.
How much have you increased your allocation to gold?
We didn't increase it. We put it on in 2024, and we've kept our position for the holding, and we've obviously seen the benefits of that. Silver.
What's your biggest contrarian bet heading into the remainder of 2026?
Wow, that's a good question with regard to contrarian bets. One of the challenges that I have as an investor is risk mitigation, and so I think there's a lot that could happen in the back half of 2027, and tail risk is high. So I can't say I have a contrarian positive bet, although we're going to keep our silver trade on. But at the same time, I'm just going to protect the portfolios against adversity.
Are you more worried about that adversity coming in the form of some sort of economic slowdown or some sort of inflationary surge?
So the tailwinds that we've got right now are so strong for the first half of 2026. There's a risk that those evaporate in the second half. But having said that, this is an election year in the U.S. for midterms, and politicians do happen to like to be reelected, and so their interest in keeping some sort of stimulus behavior going is going to be strong and pervasive. And so I anticipate that we probably will see an extension of those tailwinds into the second half. But having said that as well, I would be wary, again, tail risks. Our expectation is that we don't see a recession. It's not in our outlook, it's not in our base case, and a lot would have to happen to see that. But a market sentiment-driven sell-off is quite possible, in which case, historically, since the financial crisis, those big sell-offs don't last long, and the reacceleration, or if you will, the buy-the-dip mentality, emerges very rapidly.
So waiting for the dip to buy, that seems to be the trend. Ann Walsh, thank you so much for being with us today. Ann Walsh of Guggenheim Partners, and I'm going to send it back to you, Danny and Matt in New York.
All right, Lisa, thanks very much. Lisa Abramowitz there, and we thank Ann Walsh of Guggenheim for her time. Let's bring back in Evercore ISI Chief Equity Strategist Julian Emanuel. Julian just came out with a list of market surprises, potential market surprises for 2026. And what I love about this list, Julian, is that not only do you highlight what could surprise, but also how to play it. And of course, we protect the copyright of our guests, so go ahead and look at Evercore ISI website for that. But or subscribe to Julian's research. What would you say has changed over this weekend? I mean, if you were going to write this list again this morning, would it be different than on Friday?
Well, we would have probably bumped up the potential for the U.S. taking control of Greenland from number 7 a little higher in the pecking order, although the prediction markets are only incrementally assigning a higher probability. And of course, our trade there is to own Eurostoxx 600 puts, which certainly have done their share of the heavy lifting these last 2 sessions. And then the other one, I think, and this complicates what's going on in Greenland a bit more, is our view that there's a potential for the U.S. 10-year yield to trade above 5% in 2026. Now, 2 things. Obviously, the surge in yields in Japan is difficult for our markets to digest. It plays into this more cautionary narrative around asset volatility with regard to Greenland. But again, it just points out the fact, as it was last year, that part of the underlying strength of the U.S. market is our ability to keep interest rates in check.
So does that mean that the sell-off that we've seen in Japan, how are you weighing it in terms of what has been the driver of the market for today and what that means for the driver of a market going forward. On a down day like this, is it more important to have the geopolitical concerns that maybe Europe is going to be hit with more tariffs, or to have Japanese bond yields hit the highest on record?
Well, on a down day like this, you would prefer to see fixed income acting as a shock absorber,
right,
not a shock accelerator. But obviously, again, Japan changed that narrative. It's going to be, in our mind, if we get to that 4.5% level, where if you think about what happened last year, that was the type of level where the Trump administration started rethinking its approach to tariffs. Do you get that kind of rethink with regard to what's going on in Greenland? You know, today, Trump appears to still be in sort of acceleration mode on the subject, but you know, things are moving very quickly.
I want to focus in on the U.S. debt market, because Ann Walsh said this fundamentals are strong, and it's almost like a throwaway comment that a Treasury Secretary would make about dollar strength. I mean, are they really strong? Are they stronger than they were a month ago or a year ago, as we have debt to GDP ratios of, you know, 100% plus, 6 to 7% deficit spending outside of a recession, and that with 4 to 5% interest rates? I mean, it doesn't seem that strong.
And the sum total of what you just said from time to time has certainly been something that's roiled markets. And again, and I go back to the establishment of the Peterson Institute, I think 40 years ago, to deal with the concept of the debt problem. And here we are 40 years later. It's a much larger problem, but again, it's going to not be a problem until it is, from our point of view, creating incrementally more geopolitical instability creates a greater chance that will be a problem, but we do not see that as a discrete problem in the medium term.
Is it an issue, though, that we came into this year with a lot of bullishness, a lot of confidence, whether it came to overall markets, animal spirits, deals are back on? We were talking about this in the break, that Bank of America's latest fund manager survey shows the lowest amount of hedges since 2018 for equities. Cash levels are at record lows. You were talking about this idea, you don't sell, you want to own options, but is an issue that people aren't doing that they don't seem to be protecting themselves to the downside.
So our surveys team will poll clients, and the first week of the year, the question was, where's the next 10% in the S&P 500? 75% of the respondents said higher. When we've seen that kind of one-sided viewpoint over the course of last year, we've had pullbacks. So in that sense, it's absolutely not a surprise. And again, for us, it's just a question of, particularly at these valuations, because in the fourth year of a bull market, at these elevated valuations, let's call it imperfect news, which we're facing this morning, is going to cause more volatility.
Let's talk about AI for a moment, because you highlight that. Obviously, that's been the driver of these equity markets for a few years now. Is there a risk that the massive funding needs are difficult to meet, especially for a company like OpenAI, which wants to spend over $1 trillion and only has, I don't know, 20 billion in revenue? How do you square that circle?
So we look at the universe in general, and the spending, for the most part, from the hyperscalers is very, very sustainable as regards to the free cash flow. Obviously, at the private level, those numbers are a little murkier, but the deal pipeline continues to suggest that it is not an issue. And I think essentially what it comes down to is, how do markets digest news? And I think to the point, earnings season share price reactions, particularly from the hyperscalers, are going to be very, very important. And from our point of view, the mood has soured in technology and AI over the last 6 weeks, enough such that the bar is set actually lower for tech companies than it is for the rest of the market.
But is this debt issue a lot like the Treasury debt issue, where it doesn't matter until it does? Is it that binary when all of a sudden someone says, oh, this matters? Can we see a total lack of confidence?
Well, look, something like that is possible, but again, go back to December, the company that has clearly taken on, very large levels of debt to finance its plans, it was idiosyncratic. That company's credit default swaps surged higher, but the rest of the credit space and the hyperscalers were largely unaffected. And when you look at the NASDAQ 100, the net result, as we've seen on several occasions during this bull market, is just a sideways churn. And we think that's where we are. Ultimately, we do think all of that's going to resolve higher.
But this gets back to something you put in your list of surprises. And I love how you started this saying, have we as investors lost the capacity to be surprised? It does kind of feel like that, Julian, that you get these momentary bouts of concern about momentary bouts about geopolitics or tariffs, but we end up buying the dip and we end up higher. Have we lost the capacity to be surprised? Do we just now have this Pavlovian urge to buy the dip and nothing matters?
Well, that's why this morning is such a stark reminder, okay? The over-enthusiasm was exactly that, over-enthusiasm. But when you think about the fundamentals of a year where earnings are likely to grow at least high single digits, if not low double digits, where you're going to have lots of stimulus in front of midterm elections, and you're going to have an economy. We just raised our GDP forecast to 2.5%, and even then, the risk potentially tilt to the upside. All of that suggests that things are going to continue moving to the upper right, but this is just a reminder that it doesn't happen in a straight line.
But do you worry that it's a fragile house of cards? I mean, as long as everyone's on board, right? There's no bears. As long as everyone from Ann Walsh to Ed Hyman says it's okay until it's not, like we're going to buy the dip.
And again, days like today don't concern us discreetly. This is a logical reaction to, an unprecedented change in geopolitical configuration. Prospectively, it would be more concerning if the market just laughed this off. Then you would get to, ultimate FOMO, really over-enthusiasm.
Still not a lot of change, Julian. You have the President of the United States essentially threatening military action against NATO to annex a territory, and yields don't move. I mean, more than 5 basis points.
Well, but again, you also have to remember that the interest rate markets has been very, very calm.
Yeah.
There too again, and obviously creeping up in the last week or two, there too again, you're likely to have further upside. Probably episodically, we need to see the next round of data accompanying whatever the ructions are coming from Japan, coming from Davos.
This feels like an awkward question to ask on a very down day when things like small caps are down especially hard. But if this is a year that's going to be led by earnings, that's going to be led by stimulus, is it also a year where leadership broadens out?
So you've seen that these first couple weeks. And our problem with where the market is right now is we believe this can be an everything works year. But if you do the math, everything still needs to be led by technology, AI, et cetera, whether it's the weight of the top 10 at 40% of the index or the weight of the hyperscaler slanted sectors at 55%. But again, like we saw at the end of the internet bull market the last year or so, you had an everything rise. The problem is now is that the first reaction in areas like small caps and cyclicals, where we've seen a lot of buying these first several weeks, is that this narrative of what's going on geopolitically is a bigger threat to the growth trajectory and the pricing in of greater growth than it is in terms of a technological headwind.
By the way, I just want to bring it back quickly to WSL Predict. This is the function on the Bloomberg that I've been looking at so much recently. Rick Reeder's chances of becoming the Fed chair now in the betting markets up to 20% over the weekend from like 5. Does it matter? Does the Fed matter that much to your outlook for this year, or would it be fine if it just stayed on hold?
You're a fellow Emory Business School graduate? Great for Rick. Look, this is just another one of these things where the saga is ongoing. We're going to get a name at some point. And, you know, I think the market would be reasonably comfortable with whoever's going to end up crossing the finish line.
Julian, great to spend some time with you this morning. Really appreciate you joining us. Julian Emanuel there from Evercore ISI. Less than 4 minutes until the opening bell as futures are lower. This is Bloomberg.
You don't think the court was hurt by the perception that it was a political decision?
The court's always hurt, it seems to me, if we look political. One of my concerns, my present-day concerns, is there's too much partisanship. It's true historically that most presidents have appointed justices to the Supreme Court who are members of their own party. The partisanship should not be an overriding factor. What you look at is temperament, learning, background, reputation, whether or not you have those qualities of independence and caution that make for a good judge.
Increasingly, you see dissenting opinions in the Supreme Court aren't quite as civil as maybe you might prefer. And is that of concern to you?
Yes, it's of great concern to me that our civil discourse, our civic discourse, is not civil enough. Aristotle said that a democracy depends on an open debate where you respect the dignity of those with whom you disagree. He said democracies only live if they are sustained over a period of time by a thoughtful, rational discourse, a discourse in which you respect the dignity of those with whom you disagree.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
Moments away from the start of trading, this is Bloomberg Open Interest. I'm Matt Miller. We're looking at futures that are sharply lower. S&P futures off 1.5%. NASDAQ futures falling a little bit more. Russell 2000 futures off almost 2% this morning on concern about both the comments President Trump has made in regards to Greenland and what he would do to European allies if they don't essentially give it to us, as well as the huge spike that we saw in Japanese yields on concerns about the tax plan and elections being called there. A foundation ringing the bell at the New York Stock Exchange. Of course, yesterday was Martin Luther King's birthday. Martin Luther King would have been 97 this year's birthday on January 15th. It's, to me, shocking that he still would be so young, but he was taken from us at less than 40. He was only 39 years old when he was assassinated in 1968. Down at the NASDAQ market site, you've got Oxford Lane Capital ringing the opening bell there, and not much to say about them compared to Martin Luther King Jr.,
correct.
right?
Anything pales in comparison.
There's no day, there's no holiday for Oxford Lane Capital.
No, and I think
Maybe
that's
someday.
probably rightly so, at least for now. Matt, I'm looking at the sell-off because it is a big market sell-off this morning. Painful, especially if you consider As we were talking about with Julian, that this market is not hedged. Bank of America's latest survey showed the least amount of equity correlation hedges since 2018. NVIDIA, Tesla, Amazon, all of the Mag 7 down hard, down about 2.9 for Tesla, but at least more than 2.5% across the board, Matt.
Yeah, we had some regional bank earnings this morning. Key banks forecasts underwhelmed, as we've been telling you. U.S. Bancorp's outlook topped estimates, and it was up in the pre-market, down in the cash trade. Fifth Third came in line with expectations. Those shares, although very little changed, bouncing back and forth between gains and losses. Let's get back to Davos, Switzerland, where UK Chancellor Rachel Reeves is at the Bloomberg House with Francine Lacroix. Francine?
Because at the moment there's wild speculation about whether everything needs negotiating, whether President Trump goes really hard. I mean, how do you model this?
I would just urge people to keep cool heads.
Cool. Okay.
I mean, that's what we did all through last year, and it actually served us pretty well. And whilst trade barriers are going up around the world at the moment, we can all see that. In the last year, barriers to trade with the UK have fallen. We've secured a comprehensive trade deal with India, which will come into force in the next few months. Just taking legislation through both of our parliaments to secure that. That includes trade in services, support for exports, and also around government procurement. That's a huge deal. The deal with Korea, one of the fastest growing economies as well in the G20, is very important for the UK. But most importantly, probably, is the trade with our nearest neighbours and trading partners in the EU, which was damaged after leaving the EU, voting to leave the EU in 2016. We are now fixing that mess by improving trade relations and cooperation with our closest allies and neighbours.
And I want to get back to the EU in a second. Governor Bailey, though, said that he worries about also President Trump's attacks on the Fed, and that could create shockwaves for the UK. Do you agree with that?
I think that people recognise that certainly with this government and with me as Chancellor, there's huge respect for independent economic institutions, whether that is the Bank of England or the Office of Budget Responsibility. One of the reasons why the UK has been, has had challenging economic times the last few years is because the previous Conservative government, particularly under Liz Truss, both played fast and loose with the public finances, but also undermined the economic institutions that make Britain, or have made Britain, a safe and secure place to invest. We're undoing that damage, working closely with the independent economic institutions, but respecting their independence. And that collaboration and fiscal policy supporting monetary policy has enabled those 6 cuts in interest rates, taking rates down to 3.75%. It's the fastest speed of rate reduction in the UK in 17 years, and that's only possible because of the stability that we've returned to the economy and the decisions we've made on fiscal consolidation. And the IMF say that amongst developed economies, we have got the fastest pace of fiscal consolidation over the next few years. And that gives investors confidence around the stability in the UK, our grip on the public finances and our grip on inflation.
So there's no worry about central bank independence that could also impact or inspire maybe some of the opposition in the UK were they to come to power?
Well, look, we won a massive majority just a year and a half ago. We have 3.5 years remaining of in our term in office, and I'm confident that our economic plan to grow the economy with the stability return to the economy, bringing investment in, global investment, as well as unlocking domestic investment, is the right plan. And in the next few months, as inflation returns to target with lower interest rates, which are benefiting both households and businesses, that we will see the fruits of that in growth and higher living standards.
Chancellor, I don't know whether you're meeting with Scott Bessent, the Treasury Secretary here, or if you bump into him on promenade.
Well, I was with Scott last week in Washington. I'm seeing Secretary Lutnick later today. Our Prime Minister spoke to President Trump just over the weekend. You know, as you would expect, there are very close relations between our country at all levels.
So here in Davos, you also have an announcement, which is basically helping out with visas. Tell us a little bit about that, and do you worry that it's going to be drowned in everything else that's going on? Just a little bit of news that we have out there.
So I believe in free and fair trade. I believe in the benefits to businesses and also consumers of open economies. Economies that are open to trade, open to investment, and open to talent have always been the most successful economies. And I want Britain, even in a world where others are putting up barriers to trade and investment and talent, for Britain to be breaking down those barriers. And we are announcing today further changes in our global talent routes into the UK for 3 particular types of visa. The first is for foreign businesses looking to expand their footprint in the UK, working with them so that they can bring in talent as they expand their footprint. Second, for UK businesses in our industrial strategy sectors, which includes financial services, business services, creative industries, clean energy, advanced manufacturing, defence, etc. For those businesses, if they are bringing in talent from overseas into the UK, their visas will be the fees for those visas will be waived. And then the third announcement today is that for really great talent looking to come to UK universities, again, we'll waive those visas, as well as a specific scheme for people, gold medalists in the Maths Olympiad, offering a number of scholarships to UK universities for those people, because we want Britain to be a magnet for global talent in the same way we want it to be the best place in the world to trade from and to invest in.
Chancellor, there's a growing clamour in labour circles, even from some of your own cabinets, for the UK to join a customs union with the EU. Is that on the cards?
No, it was very clear in our manifesto that we wouldn't be rejoining the single market, the customs union, or bringing back free movement of labour. But what we have done already is brought back the Erasmus scheme, which enables young people both from the UK to go and study at European universities, and young people from Europe to come and study at our brilliant universities in the UK. We also have agreements in principle from last May around the UK doing a food and farming deal to reduce barriers to trade at the border, around electricity trading and energy trading, as well as some form of youth mobility within the European Union and the United Kingdom. So we're making progress in all of that, looking to have another summit this year where we can mark ourselves on progress against those ambitions and set new ambitions, because that summit last year was just the start of improving relations between the UK and the EU. And I would just say that, you know, at these sort of times when others are putting up barriers to trade, what Britain is arguing for, and what I believe in strongly, is that those of us who believe in free and fair trade should practice what we preach and reduce barriers between ourselves. That goes to the UK, the EU, Canada, and other allies around the world. And we are determined to lead from the front in that. We've already secured trade deals with countries around the world. We want to do more in the months to come.
But Chancellor, I mean, mathematically, just, you know, if you leave politics to one side, again, rejoining the customs union could be more beneficial. So do you see a future at any point where the UK goes back in?
We can't go back in time. And since we left the EU, we have done trade deals with India, with the US, with Korea. And obviously, you would lose some of the benefits of those trade deals if you were to re-enter a customs union. Things like the benefits of the deal we did with the US for our automotive sector. The deal that we have with India is better than the deal that any other country has with India. So I think that you have to consider all of these things in the round. I don't think we need to return to the customs union to seize greater benefits of free and fair trade. And we are working piece by piece, but with a strategic goal in mind, which is to make it easier for British businesses to sell into European markets and for European businesses to sell into British markets. And when the barriers to trade in other markets are going up, we want to create more opportunities for our businesses to trade with other countries around the world.
There is, of course, big news about a new embassy, a Chinese embassy.
That was UK Chancellor Rachel Reeves speaking at Bloomberg House in Davos. You can continue to watch the conversation at LiveGo on your terminal. Yeah. Coming up on this show, Netflix makes another move in the fight for Warner Brothers. More on the streaming giant and their now cash deal. Coming up next, you're watching Bloomberg.
The phone is, what's great about it is it's a well-developed gaming ecosystem, right? So it, you know, folks know to find games there, but it's also a highly competitive gaming ecosystem. So it's developed, this gives you both that upside and that downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is, you know, social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, you know, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, you know, basically are going to like unleash this with a bunch of creators, and they're going to go figure out stuff that we didn't even imagine that they can do with that interactivity.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Let's get you your top calls this morning. What the sell side is upgrading and downgrading. First at Morgan Stanley, they upgrade Brinker to a buy. They note that the parent of Chili's is well positioned as restaurant expectations reset across the sector. They also see stronger growth in fast casual and beverage concepts, where demand appears more durable. Those shares up 1.6%. Next up, JP Morgan, they downgrade ConocoPhillips, saying that the stock looks fairly valued after resetting its oil sector view for the year. They also prefer U.S. oil majors over Canadian peers as geopolitical risks rise and downstream businesses look more resilient. Finally, Bank of America, they downgrade Ciena, saying that the stock looks expensive and demand signals are starting to top out. They also note that the communications equipment maker may not get many new orders as hyperscalers reduce their capex, and that leads them to a more cautious outlook. Matt, those shares down 1.4%.
All right, so look at the upgrades and downgrades that we've got. Now, Let's go to deal news. Netflix making the latest move in the fight for Warner Brothers. It is now offering, as essentially had been expected, all cash for Warner studio and streaming business. The offer comes as Netflix gets set to report earnings this afternoon, which makes it all the more interesting. Joining us now with the latest is Bloomberg Tech and Media co-host Caroline Hyde. It's all one industry. Caroline, so...
Throw a few other industries into that. AI is everything, right?
And cars as well. So Netflix, does this change to all cash make it really that much better than it was and that Paramount Skydance's offer is?
The market seems to be interpreting that it's got a fairer chance, certainly in expediting the deal, certainly at getting it over the hill of pushing back on Paramount, which had, again, time and time again, been saying, look, our deal is more appetizing because it is cash, because Warner Brothers Discovery isn't giving us the clarity on what money they'll be getting for the cable networks, which aren't part of the Netflix offer. This gives more certainty on real money they'll be getting because Netflix's share price has been under pressure. Look, it rallies a bit today. They're now worth about $400 billion. At one point, they were worth almost $600 billion. They've come down some 20% since they first announced clinching the deal with Warner Brothers Discovery to a certain extent. So, yeah, if you didn't want $4.50 of shares, you wanted all it in cash, and that looks a little bit better. What's even better for Netflix is that this doesn't affect their leverage much. It'll up it by about 0.5x, is what credit analysts over at Bloomberg Intelligence are saying. They're still really strong fundamentally, and Geeta's team over at Bloomberg Intelligence are just saying this gets them closer to the post, and more broadly, we're likely to have to see Paramount come back, and if anyone's going to take it seriously, they're going to have to up to $32 a share. So we might see maybe some shareholders could be swayed if they get that sort of an amount being offered.
I guess there's this sense, and to your point of the share selling off, if shareholders don't like this deal, they don't want this deal, maybe they don't think Netflix needs it, they're going to have earnings today. Do you think that there'll be a sense, maybe not urgency, but a sense from executives that they need to, or at least very much so desire to, expand their IP catalog?
Because they have had hit after hit, and that's going to likely solidify what is this quarter's earnings, where you're seeing almost 20% revenue growth, call about 18%, and that's because you've had the finale of Stranger Things. You've had people being interested, actually, in the sports side of the equation. Look, you've had Anthony Joshua versus the Paul brother, whichever one you want to pick, but that big fight, everyone wanted in on that. NFL over the Christmas. Maybe they do have to start to get into the live broadcast side of the equation if they're going to get more and more of us signing up. The revenues growth is still strong. US, Europe, Asia, APAC, and Latin America. But are they going to be able to continue getting us to switch across from cable and decide that we're all in on Netflix? To do that, maybe they have to up their sports catalog, but they have to up their catalog more broadly, and Warner Brothers Discovery would really help them do that. What they have, like 450 million people subscribing to the joint of the combined powerhouse that it would be. They do need to show that they're going to get almost double-digit growth revenue this quarter, this year. But what about next year? And people really want to see, look, you are going to be bringing in $50 billion in terms of revenue for the next fiscal year, and that's about 13% growth. That is slightly slower than this quarter and this year just gone.
All right, Caroline, we look forward to your program. Bloomberg Tech kicks off at 11. Caroline Hyde there with Ed Ludlow. We'll take you through that hour, and of course, there'll be a lot of focus on Netflix, this deal for Warner Brothers, and I hope a little bit of K-pop demon hunters as well. Coming up, President Trump threatens legal action against J.P. Morgan. We look at the battle between Washington and Wall Street next. This is Bloomberg Open Interest.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Good morning.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
This is Bloomberg Television. It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
The question is, what you don't want to do is, squeeze out or drain credit from exactly that section of the population that needs it most. So, once again, this will land somewhere, and there'll be an element of adjustment and compromise. We are in constant communication with various policymakers and the like, and the industry too, because it's not just Citi; it is the old street that is, And once again, I think affordability thing is something that has to be dealt with, and we will land somewhere.
That was Citi's global banking head speaking to Bloomberg in Davos House. His comments come as the White House weighs an executive action to enact a cap on credit card interest rates. For more, Herman Chan, senior U.S. bank analyst for Bloomberg Intelligence, joins us. Herman, not only are they weighing it, today was supposed to be this deadline.
It is this deadline, right?
Okay, well, yeah, but is it a legal deadline? That's a little bit more squishy, but it's the Trump-imposed deadline. Have we had any movement at all from banks for them to offer a credit card that caps rates at 10%?
It is a Trump-imposed deadline. We're not sure if that's really a legal deadline, but at this point, it's just status quo for the banks. They're operating like in normal conditions where credit cards are their credit cards. They're not offering a 10% blanket rate, and they're just operating as is.
They are being sued, though, some of them, JP Morgan.
Mm-hmm.
So what do we know about this lawsuit?
Right. I characterize that as heavy as the head that wears the crown, right? JP Morgan's the biggest bank in the United States, most profitable, really strong returns, really strong valuation, and a lot of that really reflects reputation risk during the prior Biden administration, where it was really embedded into the supervisory actions of bank regulators. So the banks had to be a bit more cautious with what happened after the Capitol riots. So I think that's just reflective of how banks had to operate back then, and really now we're seeing the repercussions of that under Trump.
It's also interesting for a sector that is supposed to be benefiting from this White House and from deregulation. On that note, you had some of the regional bank earnings today, and it struck me that 2 of the 3 that reported are undergoing their own M&A.
Right.
Fifth Third with Comerica, and then you also have U.S. Bancorp with BTIG. Is this just easily the theme? Does that kind of overshadow their individual reports, the fact that the regional banks are becoming more like super regional banks?
Yes, so that's happening, and that's actually one of the positives under the Trump administration, where there's much less red tape for M&A, and that's really struck a chord for the large regionals where they're doing more bank M&A deals. We'd expect that to continue, especially with some of these better valued banks. We're potentially seeing some more activity by the likes of PNC and M&T, and some of these deals that have been announced, they'll be digested and really strengthen the earnings power of U.S. banking.
How much does that M&A continue, Herman? Because I remember when we were talking to you every day about SVB, a lot of people were shocked to hear that there were like 5,000 banks in the U.S. It's an incredibly fragmented market once you get past the top 6 or the top 60. Do you expect that number to shrink?
Yeah.
Are we going to see 4,000? Are we going to see 3,000?
We're a little over 4,000 now. We'll see that shrink over time, and that's just ongoing to continue because there's not a lot of new banks that are opening up. There's not a lot of de novo action, but there is going to be more consolidation because banking industry is super fragmented, and there's a need for economies of scale given the fact that banks are investing in compliance, technology, et cetera. So
and less regulation, right? So I'm just wondering, does administration supercharge that natural process?
Yeah, it's happening now. So bank deals are getting approved by less than 100 days now. So, and that was something that was unheard of under the Biden administration, where it took upwards of a year or above to do deals. So you're seeing more M&A activity, and that'll continue throughout this term.
All right, Herman, thanks very much. Herman Chan there of Bloomberg Intelligence covers all the banks for us. Go to BIGO on your Bloomberg terminal to find his research. We are almost, well, I guess 25 minutes into the session here, and you do see losses on the S&P, NASDAQ, and Russell of more than 1%, about 1.33% for the two major indexes there, as investors worry a little bit more about geopolitical tensions.
And what's happening in Japan. Yields are easing off after the finance minister told Bloomberg TV, told Haslinda Amin, that he wants markets to be more calm. Scott Besson also saying that he met with his Japanese counterpart, so clearly it is something that they are worried about.
Take
a breath, and we will take a breath and come back with more market action. And Nancy Tangler, that's coming up.
Such an incredibly exciting moment with AI. It is really the most profound technology of our lifetimes, and I think it has the potential to help us rethink literally everything. The potential for economic impact, societal benefit is honestly boundless. When we think about the economic impact for Europe in particular, it's around a 1.2 trillion euro estimate of the productivity growth that can be unlocked. This platform shift that we are living through, I think, is going to create untold amounts of value for the world, but also for the businesses and for economies, which is why I'm incredibly optimistic in this moment for Europe, but also for the whole world.
How do you think about job losses or safety for some of the AI tools?
You know, I hear the anxiety, and I understand the anxiety about jobs. I think that we are certainly going to live through a massive transition about how people learn to work alongside these tools. I mean, the reality is I do think there'll be some number of jobs that are displaced. I think it is a smaller number maybe than some anticipate. We estimate it's around 7%. And I think what's important is that we have programs that help those 7% transition into new fields of work. I think what is more likely is that most of us are going to learn to work alongside these tools. So we estimate about 2/3 of us. If you think about the tasks you do in your daily life, when you look at every industry, there are administrative tasks that are happening everywhere, and that's what AI is most helpful in improving.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
CBS News on the Hour, your home for original reporting.
I'm Deborah Rodriguez. Stocks are dropping in early trading as President Trump doubles down on his threat to tax EU nations the day before he's set to join them at the World Economic Forum in Davos, Switzerland. Dow's down 665, S&P off 91, and the Nasdaq's down 360. Joe Osceola.
These are some pretty extreme tariffs. He's saying he's going to put 10% tariffs starting on February 1st on 8 NATO members who have come out in defense of Greenland. That would raise the effective tax rate quite a bit if that were to actually go through.
U.S. allies already in Davos have been voicing frustration and concern today. Former U.S. Ambassador to NATO, Kay Bailey Hutchinson, tells CBS Mornings.
I think that we will have more assets in Greenland, which I think is the right thing to do. And I think we'll do it with the cooperation of the Danes, the Greenlanders, and all of NATO.
Speaking from Switzerland, California Governor Gavin Newsom urged Europeans to stand up to the president's tariff threats and, quote, have a backbone. Today marks 1 year since President Trump was sworn in for a second term. Insight from CBS News Chief Washington Analyst Robert Costa.
President Trump is someone who still has grievances about how the rest of the world sees him and the United States. And unlike so many ambassadors here in Washington who say that their leaders are following a certain unwritten playbook about how to govern in world affairs, President Trump's following his own intuition, and this is rattling world leaders.
CBS News poll finds 41% of Americans approve of the job he's doing so far, 59% disapprove. A major winter storm and dangerously cold temperatures have the northern U.S. in a deep freeze. Correspondent Tom Hansen is in suburban Harrison, New York.
In New York State, it was near whiteout conditions for drivers in the Buffalo area as bands of snow moved in, on top of wind gusts up to 60 miles an hour and 10 inches of snow in some parts. In the small town of Clifton, New York, 2 men died on Sunday after falling through the ice and into frigid water. According to state police, they had been ice fishing.
Prince Harry's back at court in London.
I'm Vicky Barker at the Foreign Desk.
Good morning, Harry.
Walking briskly into day 2 of his privacy lawsuit at London's High Court. The Duke of Sussex has joined 6 other claimants, including Elton John and Liz Hurley, in accusing the Daily Mail of phone hacking, among other privacy breaches. On day 1, Harry's lawyer said the Mail's intrusions left his client distressed and paranoid. The Mail denies all the accusations against it. Vicky Barker, CBS News.
Dow now down 713. This is CBS News. One of the largest measles outbreaks in the country has been linked to new cases on the other side of the U.S.
Health officials in Washington state confirm an outbreak connected to a contagious family traveling from South Carolina. That's where there's been a major outbreak of the highly contagious viral disease, with a recent 30% surge and more than 550 cases so far. The 3 measles cases in Washington are all among unvaccinated children just north of Seattle. Local officials are now trying to contain it. Last year was the nation's worst for the spread of measles in the U.S. since 1991, the CDC reporting more than 2,000 cases. Steve Kathan, CBS News.
A federal appeals court expected to rule today on a state law in Texas mandating the display of the 10 Commandments in every classroom. 3-judge panel has already called it plainly unconstitutional. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Tuesday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We're streaming live on YouTube as well. Scarlett Fu and Paul Sweeney here with you at the Bloomberg Intelligence program. Supreme Court. We're waiting for some Supreme Court notices that may come down this morning. When that happens, we will bring that to you. We're also going to check in with Lisa Abramowitz. She's Bloomberg's surveillance co-host. She's in Davos. We'll get her thoughts on what she is seeing there. They've had some great interviews throughout the day and more to come this week. Mike McGlone, Bloomberg Intelligence Senior Commodity Strategist. Talk to us about gold, oil, anything else we want to talk to them about on the commodity space. But gold higher yet again today, $4,700 per ounce. We'll break that down. Phil Orlando, Chief Equity Market Strategist at Federated Hermes. He's going to join us here, get his thoughts on these markets. Again, a big sell-off today on geopolitical risk as well. Henrietta Triz, Managing Partner and Director of Economic Policy at Veda Partners. So we'll get her thoughts on all this tariff discussion front and center at Davos and across Europe and the U.S. We'll get her thoughts there from a political perspective down there in D.C. But right now, let's kick this whole thing off with John Tucker and in Bloomberg.
All right, guys, and welcome back, Paul. This flash brought to you by IBKR. Will the U.S. unemployment rate exceed 4.5% in January 2026? At IBKR forecast rate of the yes was recently at 33%. Start predicting today at ibkr.com/forecast. Last trading day for this contract. February 6, 2026. The surge in yield really rattling investors today. The S&P 500 has now, erased its advance for 2026. Yet 10 of the 11 major industry groups lower. Supermicro Computer, best performer, that's up over 6%. 3M's profit forecast missing expectations, so those shares right now down close to 5%. Overall, the S&P 500 99 points lower, down 1.4%. The Dow Jones Industrial Average down 708 points. The Nasdaq 100 371 points lower. Just getting this headline with respect to tariffs and the Supreme Court. The Supreme Court does not rule on the Trump tariffs today. So I think the next possible day is Friday. Andrew Sheets, meantime, at Morgan Stanley remains positive on U.S. stocks.
We're encouraged by a number of indicators of global growth data that have been looking better over the last couple of months. Our own GDP forecasts have been going up. Our outlook for earnings is relatively positive, but you've certainly injected some serious uncertainty into this week.
Netflix is going to report after the close of regular trading. They've also amended their Warner Brothers deal to an all-cash offer. At this point, you got to be wondering, are they kind of bidding against
That's
themselves?
what I said this morning.
So
yeah.
We'll see. Let me finish up with yields. The 10-year up 5 basis points. That's 427. Kind of knocking on the door of 5. 30-year, the long bond, 7 basis points higher, 4.91%. And we check the market's view all day long, right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Scarlett and Paul. Looks kind of, I'm going to say it's an Irish tan.
The Irish tan, yeah. Lots of sunblock, but the sun
What does an Irish tan look like? I'm sorry.
Sunburn, when you get all burnt. we don't tan very
There's no
well.
tan. Got it.
Exactly.
All right.
So there's a lot of sunblock. Aruba's like darn near the equator. It is hot, the sun down there, but fortunately, there's a nice breeze. Good week down.
Well, now you're cooling off here in the Northeast.
Exactly. Holy cow. I mean, the real field temperature, the wind chill, 2 degrees in Midtown Manhattan here today. So how about that? That gets your attention.
It's fun.
Yeah, exactly. It's wintertime. It's what it's supposed to be. All right, Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well, so check us out there. Let's take a look at some of the stocks on the move here today on this sell-off. We're joined by Bloomberg's Christine Aquino. Christine, what are you looking at?
Well, we've got to take a look at Netflix, Paul, right? So ticker NFLX. So those shares higher today, up by 1.2%, pairing some of those opening gains, but still, investors taking it as a positive that now Netflix has amended its bid for Warner Brothers. They are now offering an all-cash agreement for the studio and streaming businesses. So previously, the agreement was $27.75 a share in cash cash and stock, which drew criticism from their main rival, which is Paramount's guidance, right? That was one of the main contention points that they were being attacked on. And so now Netflix has amended its deal. They're going to pay all cash. And Netflix co-CEO Ted Sarandos saying that the Warner Brothers board continues to support and, quote, unanimously recommend their transaction. So I'm sure that the Netflix earnings call after the close today is probably going to be all about this.
Yes, guaranteed. All right, second on the list.
Let's take a look at AppLovin today as well, Scar. So AppLovin, APP, those shares not doing too well today, down 2.7%. That is because they did see a negative research report from Capital Watch. Now, AppLovin actually has been a target of short sellers prior to this. So we've seen Fuzzy Panda, Culper Research, both publishing short reports against the company last year. Our Bloomberg Intelligence analysts weighing in, though, saying that AppLovin's fundamentals appear intact despite the negative research report, and they say that fourth quarter sales could be consensus given the early wins from its AI-driven ad tech tools e-commerce launch. So we'll see how that goes.
Yeah, the stock's down 16% this year, but on a trailing 12-month basis, it's up over 60%. So I didn't know how big this company was, 190 billion in market cap.
It's a big meme stock.
Holy
yeah.
Yeah.
It was popular amongst the meme stock crowd last year, hence the 60+%
Palo
gain.
Alto, California. Nice. All right, one more for us, Intel.
Let's take a look at Intel. Yeah, so ticker INTC, big winner today, up 4.6% for those shares. It got double upgraded, so it got upgraded at HSBC to hold from reduced previously. HSBC analysts noting that their agentic AI is driving upside to their CPU demand, and it also received an upgrade to buy from neutral at Seaport Global Securities. So earnings due on Thursday after the market close. Bloomberg Intelligence's preview cites that they are likely to deliver results in line with consensus, but they're still expecting the company to stay with a conservative outlook given all the supply constraints it's battling. So we'll see.
All right, Christine, thank you so much. We appreciate that. Christine Aquino over there with some thoughts on what's moving in the stocks here. For more conversations like this, subscribe to our Stock Movers Reports. Listen to 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. You know, going into Davos, I thought the conversation with the global folks would be AI and what it means.
Oh,
and
silly
all the
you.
good, all the kind of good stuff and, you know, where it's going to take the world. I think it's kind of getting supplanted a little bit by trade discussions here and tariffs and all that kind of good stuff. And President Trump will be making a speech there tomorrow. Lisa Bromwitz is there with the surveillance team. She is co-host of Bloomberg Surveillance. She is in Davos. Lisa, I know you guys had a ton of great guests on this morning. What's the vibe in Davos here as you kick this thing off?
I think that you actually nailed it, Paul, that so many people came here preparing to talk about artificial intelligence and what that will do in the transformation of businesses and really the excitement around growth. And it has been supplanted not just by geopolitics, but by Greenland, of all things, right? I mean, this wasn't exactly on anyone's bingo card that you were going to come into this Davos discussing Greenland front and foremost. This is being taken as an existential threat to Europeans, and on a broader scale, it's being taken by international investors, including those in the United States, as a question about whether the United States is as reliable as it has been in the past, and whether you need to build in an extra risk premium, which is the reason why people are watching the action in the markets today and saying, okay, this is a Sell America moment. Does it have legs based on some of what we're hearing here in Davos, this idea of what is the new world trade order and how much is the U.S. going to be part of it in the way that it has been in the past?
Right. I mean, the question is de-risking the United States something that's theoretical or something that's actually doable, actionable? And I suppose we got one answer from a Danish pension fund, which told Bloomberg that it plans to exit treasuries by the end of January. And the Greenland threat was certainly a part of that. Give us a little more context around this Sell America idea.
So this particular fund, it's not a very large position, and it is in a country that is most directly affected by the Greenland issue and some of the controversy there. That said, on a holistic level, on the margins, you hear about people shifting away from the United States. They also talk about how the U.S. assets are not on sale. The rest of the world, well, a little bit more so. So we are hearing this more and more. We were speaking with one of the individuals at General Atlantic, Martin Escobari, and he was saying that they now have more assets outside of the United States than in the United States, and that it is partly related to policy uncertainty. You're hearing this from a whole host of different funds, even Even Gary Cohn, the vice chair over at IBM and the former head of the National Economic Council of Advisory to President Trump in his first term, said he is hearing and seeing money move away from the United States. That said, to your point earlier that Paul was making, AI still very much on the counterpoint there, right? So you also are hearing an incredible amount of enthusiasm here about what some of this technology will bring. And what country is at the epicenter of that? The United States. What country has the deepest liquidity? The United States. And so everyone keeps getting hamstrung between these two ideas of what's going on in the corporate sector, which looks pretty bright, and what's going on in the political sector, which is just introducing more uncertainty that a lot of people are having a hard time figuring out how to really balance around.
Lisa, we heard from French President Macron take a pretty combative tone in his speech at Davos today, yet the Chancellor of the Exchequer, in a discussion with Francine Lacroix, Bloomberg's Francine Lacroix, maybe a little bit of a conciliatory tone here as it relates to Greenland and tariffs. Is there a consensus forming from Europe?
Unclear. I mean, we were just speaking with the Finnish president, Alexander Stubbs, and he was saying he expects there to be some sort of reconciliation by the end of the week, and he does expect there to be some sense of some sort of trade deal. That said, you hear a very different tone from the likes of Emmanuel Macron, and each country has a very different take on this. So to that point, how much can Europe get a consensus at a time when really some of these alliances are called into question? That said, a lot of people are saying that President Trump is offering a bit more of an off-ramp, and Scott Bessent, Treasury Secretary, has come out and talked about how this does remind him a little bit of Liberation Day last year in April, which was the opening salvo, and after which the temperature came way down.
All right, Lisa, thank you so much. We appreciate that. Lisa Abramowitz, Bloomberg Surveillance co-host. She is in Davos. And folks, watch Lisa, John Farrell, and Anne-Marie Horton on Bloomberg Surveillance tomorrow at 6 a.m. Wall Street time from Davos, Switzerland, at the center of it all.
You know, we didn't even get to the big sell-off in Japanese bonds either, because that was something else that folks at Davos had to grapple with, this idea that maybe there's a Liz Truss moment taking place in Japan.
Yep, absolutely. And I'm just looking at our bond market, the U.S. bond market. You know, we have the 10-year Treasury, up on about 5 basis points, selling off a little bit there. And the 10-year Treasury of 4.27%. So if you're in Davos thinking you can have a nice, relaxing time drinking some great French wine, some good food, there's a lot on the table here for global economy, global world to think about, but particularly our friends in NATO and France and just across Europe.
And of course, tomorrow the president will be speaking, addressing Davos. So when that happens, we will take you to it.
Absolutely. Looking at the markets here, it's selling off. S&P off about 100 points, 1.4%. The NASDAQ off about 1.5%. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg newsroom with his Bloomberg Business Flash. Right now, the major stock average is selling off as yields get kind of, what's that word? Yippee. Several firms are looking at raising debt today, but they opted to put deals on hold and watch the market reaction. You have the 10s up 5 basis points, 427. The long bond up 7 basis points at 490 right now. As a result, S&P 500, 88 points lower. That's a decline of 1.3%, just about erasing its advances in 2026. I mean, for the year, it's up right now less than 0.1%. Dow Jones Industrial Average, 580 points lower. And the NASDAQ 100, 344 points lower. That's a decline of 1.4%. Just to take on the pulse some of the climate out there, they hold just $100 million in U.S. Treasuries, just $100 million. But a Danish pension fund are planning to exit U.S. Treasuries, they say, by the end of the month. And, of course, the Supreme Court did not rule on President Trump's tariffs today, so this means it's probably going to be at least another month before it comes up again. NetApp, the worst-performing stock in the S&P 500, that's down over 7%. SanDisk, the best performer, that's up close to 7%. Might cost you a little less money if you're in the market for an engagement ring. Bloomberg has learned that De Beers...
Wait, deflation? Really?
Well, it's unique, idiosyncratic to the diamond market. De Beers cutting its official diamond prices for the first time in more than a year. The industry's been having a bit of a crisis. You had a pullback in Chinese luxury spending. They're also getting competition from synthetic diamonds.
That's where I want to go, because they say you can't tell the difference. Yeah. So why wouldn't you get a synthetic?
Gen Z does not care about whether it's organically grown or lab grown. They're just in for the sparkly at a good price.
Well, I bet, you know, with the blood diamonds, whether that's still an issue or not, I would think they would prefer the synthetic kind. Yeah. Less controversy. Anyway, we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Scarlett and Paul.
All right, John Tucker, thank you so much. We appreciate that. Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Broker Studio in chilly New York City, streaming live on YouTube as well. Gold, where are we here? Up 1.3% again today, $4,730 per ounce. It's on a trailing 12-month basis. Gold is up 75%. Spot silver up over 200%. Mike McGlone, it's 70 degrees and sunny down in Miami. You are the smartest person in the room, no question. What do you make, Mike? You're the senior commodity strategist here for Bloomberg Intelligence. What's going on with gold?
Well, sometimes you're hot and sometimes you're not, and gold is just too hot now. I think it's getting to that stage. Now, the momentum's clearly up. It can easily get to $5,000 an ounce, as silver could get to $100 an ounce, and then potentially put in a peak for many years. The key thing I'm worried about, Paul, is what you're seeing happen in the stock market today, volatility picking up. Gold has never rallied at this velocity with stock market volatility staying so low. 180-day volatility still is at 11.1% or so. That's about half what the VIX is at 20. This has just never happened before. So what I think is happening is gold is front-running some normalization in the valuation of U.S. stock market. Gold market absolutely loves President Trump, but it doesn't matter. When my prices get up this high, this far, this fast, and there's a pylon, typically puts in peaks that can last for decades.
Let's talk a little bit about nat gas, because whenever we talk to you about oil, you point out nat gas and what's been going on there. And we know inventories had been above average, but we have a lot of cold weather in store for the Northeast, actually much of the U.S. over the next couple of days. And that's created some big moves in the nat gas futures.
Most volatile of commodities, Scarlett, you mentioned, is nat gas. And yes, old man winter's coming back strong. So the key thing is for nat gas, it's all about heating degree days, which are obviously in the winter, versus global warming. So we had a very cold winter last year. If we get the second colder than normal winter in a row this year, which may be heading that way, it's going to push back on that global warming trend. I'm still not willing to do that. I think nat gas is just getting, this pop is classic for January. You look at those forward contracts out to March and April, they're bumping up against 4%. They were down at actually about 3%. They were down at 280 or so last week or so. I think they're more likely to head lower, but you need old man winter to stay really strong for nat gas to stay up because the trend's been downward forever, like crude oil.
Just year to date, nat gas up 22%, so that gets your attention here. But it's still a supply issue primarily. Is that the case, Mike, where it's just there's so much supply of oil and gas?
That's the key thing about nat gas is the elasticity pull. Every time we pop above 4 or 5, that supply comes on from wherever in the U.S. and Pennsylvania and the Permian and everything. And there's potentially, you know, we have a motivated president to bring more of that on. And then, well, we all hear about the demand for electricity, but that's just not as important. That's probably why things like copper and silver are going up. They're electrically associated. But nat gas is just a lesson you learn in nat gas is typically don't buy it above 5, and you look for it to get down to 2, and that is really what usually typically bounces from. It's the supply elasticity. It always comes on at higher prices.
All right, thank you so much, Mike McGlone. He is our go-to guy for everything on commodities. Mike McGlone is our senior commodity strategist here at Bloomberg Intelligence, talking gold, talking nat gas. We didn't even get to really the other metals like silver or copper.
No, we didn't get the pork bellies. We didn't get the pork bellies.
You know, we always tease that, and I'm not sure we'll ever get to it.
I don't think we'll ever get. He's down in Miami Beach, 72 and sunny. Rest of the week,
So
like
jealous.
high 70s.
Oh, God.
He's got it made. He knows what he's doing.
All right, let's talk about the markets here. Phil Orlando's chief equity market strategist and head of client portfolio management at Federated Hermes. And Phil, we are looking at an S&P 500 and NASDAQ that have given up their gains so far this year, which is notable, I suppose, because coming into this year, strategists seemed almost unanimous in their bullishness, predicting a 4th straight year of double-digit gains. I mean, even if we get there, it's going to be a rocky road to get there, isn't it?
Scarlett, first of all, thank you very much for having me back on the program. I think you summed it up beautifully, that I'll include us in the group that thinks the stock market will be higher by the end of this year. We've got a 7,800 forecast on the S&P 500, which would be, you know, roughly a 15% return from where we ended last year. But the notes that I've written so far this year, I've been warning clients that this is going to be a significantly choppier, more volatile year for 2 reasons. Number one, it's a midterm election year. Number 2, we have a leadership transition coming up with the Federal Reserve. And if you go back and study the financial markets over the last 80 or 90 years, when we have a confluence of those events, a Fed transition and a midterm election year, there's a lot of chop and volatility. We're going to get through it, but there could very well be some air pockets at any point during the year.
Given that backdrop, Phil, are there sectors that tend to be better performers in a year where there could be some volatility?
So the short answer is yes. You want to pay attention to valuation, first of all, and remember that the domestic large cap growth and technology names are really extended here. They've done phenomenally well over the last 3 years. So those are not the areas that I'd be chasing at the top of the market. Healthcare and financial services, more stable demand and valuations much more attractive. Industrials look pretty good. Utilities look pretty good. So there are pockets of the market that we think are going to do better than others.
What about energy, given the president's push for big energy companies, big oil companies to start picking up some of the slack in terms of rebuilding Venezuela's oil infrastructure? There's a lot of potential for money to be made there, but after a long period of investment first.
I think you hit the nail on the head. That's a very long cycle. And our view a year ago was that the Trump administration coming in, you look at Treasury Secretary Scott Bessent's 333 plan. Bullet point number 2 in that plan was we want to increase energy production, oil, from 13 million to 16 million barrels a day. All things being equal, that should have resulted in lower crude oil prices. And over the course of the last year, crude oil has dropped 30%, from $80 a barrel WTI into the mid-50s. So we took our overweight in energy down a year ago. We've been underweight in expectation that we would see prices come down. That's happened. Now, may we choose to change that in the future based upon some developments? We're remaining vigilant, but so far the market has acted the way it should have acted.
We're starting to get into the teeth of this earnings cycle here, Phil. How do you think about earnings in 2026? Because one would argue they really have to come in strong yet again to support this valuation.
And they're going to. I mean, we're less than 10% of the way through the fourth quarter earnings season, but revenues are up 8% year over year. Earnings are up about 14% year over year. Those are trends that we think are solid and are likely to accelerate over the balance of the year. So the underlying fundamentals of corporate America and of this economy are in really good shape right now, Paul.
If you have new money to put to work, long-term money to put to work, do you go in right now or do you wait for things to kind of play out? If this is really Liberation Day Part 2, that suggests that there's going to be a big potential sell-off and then a big recovery. Do you wait for that or do you go in, plow straight ahead into those financials, into those healthcare stocks?
The short answer is yes. You do a little of both. You get your toe in the water, but recognize that Liberation Day Part 1, from late February to early April, stock market was down 21%, right? I don't think that's going to happen again. But we just hit a record high last week. Who's to say that we don't have a retest of the 200-day moving average here on the S&P 500? That would be about a 9% decline from last week's levels, and maybe 6 or 7% from where we are right now. So I'd hold some chips back, keep some dry powder, because we were expecting that there'd be a couple of air pockets over the course of the year, and maybe the first one's right here.
Small caps, I'm hearing more about small caps here as people think about 2026 allocations. How do you think about small cap stocks?
We have loved small caps. We have been on the small cap train probably a couple of months earlier than we needed to be, but that's one of our top performing categories. And largely the decline in interest rates has helped in a number of ways. Remember, small cap companies do a lot of self-financing, so that lower interest rates, it's easier to finance. A small cap company will do 80% of its business here at home in the United States. The U.S. economy is raking right now. We've got a 3% GDP forecast for calendar 26. That combination is resulting in a stronger M&A cycle and an IPO cycle. The small caps benefit from that. And within the small cap sector, we love healthcare and biotechnology, two sectors that are doing really well. So for a lot of reasons, we think that this rally we've seen in small cap the last 6 months was exactly what we were expecting, and we think it's got legs.
All right, Phil, thanks so much. Appreciate it. Phil Orlando, Chief Equity Market Strategist, Federated Hermes, joining us here on the market call, remaining bullish, as is he's had some really good calls, long and short the market, and he's back on the long side here, driven by, in large part, earnings, which starting. I understand when I was sitting on the beach last week that companies were reporting earnings.
They did, yes. The big banks reported, now the regional banks are reporting, and he mentioned small caps. Of course, financials are well represented in the Russell 2000, so if you wanted to go down that road, the Russell has plenty to choose from. All right, S&P bouncing off its low, down about 1%, was off 1.5% earlier in the futures market. NASDAQ off 1.3%. We'll have more coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with his Bloomberg Business Flash. Right now, you have 10 of the 11 major industry groups in the S&P 500. They are higher. It's information technology. Lower, I should say. It's information technology that's the worst performer. And those are the semiconductors like NVIDIA and Broadcom, both lower right now. Interestingly, Intel, it was upgraded at a couple of firms, and Intel shares right now up close to 7%. The S&P 500, 75 points lower, down 1%, 68.65. Pairing some of the earlier losses, the Dow Jones Industrial Average down 469 points right now, and the NASDAQ 100 down 281 points. That's a decline of 1.1%. Seeing yields back off somewhat. The 30-year, the long bond, 6 basis points higher. That is up to 4.89. Karen Manna at Federated Hermes says yields are probably headed higher.
We definitely do have momentum trending again toward a 30-year at 5, which means, again, a steepening yield curve and a world and investor base that's concerned. It's now, again, pricing in risk, not just good fortune.
Netflix sweetening the terms of its bid to buy Warner Brothers Discovery, giving an all-cash offer for its studio and streaming business. They report after the close, by the way. Netflix up 0.3%. Move over pickleball? What's this? The Tennis Channel founder, Steve Bellamy, launching a new racket sport. It's called Tiptee, with backing from motivational speaker Tony Robbins and Star Trek actor Chris Pine. Oh, that ought to do it. Tiptee, you play this on a pickleball court, but you use a foam ball rather than a hard plastic ball. The sport allows for extended rallies and longer strokes than pickleball. And I guess it's safer because, you get hit with foam in the eye, that you're okay. We check the markets all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Scarlett and Paul.
I like the sound that the racket makes in pickleball, but I think if I had to live near a pickleball court, it would drive me bananas.
Right.
I've never the pop is very satisfying to hear.
Have you played pickleball?
No.
No, me neither. John, I know.
He just shakes his head. There's no way.
We looked at him. We're like, no, John Tucker doesn't play pickleball. All right. Thanks so much, John Tucker, with our Bloomberg Business Flash. Well, the president is on a mission. He is determined to gain control of Greenland, and he has made that his central issue as he makes his way to Davos tomorrow to speak with global leaders. And in doing so, he's breaking all kinds of diplomatic norms, sharing Emmanuel Macron's personal text to him and essentially mocking him. So new things are happening every day. Let's bring in Henrietta Trays. She's managing partner and director of economic policy at Veda Partners. Henrietta, help us make sense of what is happening here when it comes to Greenland and the president threatening perhaps the EU trade deal that was struck last year, threatening to impose more tariffs even as we await a Supreme Court ruling on the legality of those tariffs.
Yeah, I think you just nailed 2 of the 3 reasons we are talking about Greenland. The first one is that the U.S.-EU trade deal, as far as I can tell, is dead. The EU was planning to drop its industrial tariffs on U.S. exports to 0% later on this week. That's off the table. I think the agreement and the lower 15% tariffs that were reached last year are probably going to revert back to the 20% Liberation Day tariffs. So I think that's an acknowledgement that there's no deal on digital services taxation. There's no deal on agriculture issues that have plagued the 2 sides for 100 years. There are a lot of issues with the U.S.-EU trade deal that just are not going to be resolved. And this is the president's way of sort of circumventing that. And then finally, as we all await the Supreme Court, it strikes me as plainly obvious that when and if they do strike down the president's IEEPA tariff authority, and the Republican Party and President Trump specifically are materially underwater on their handling of inflation, prices, and the economy with the American voter base, they don't have the ability to keep ratcheting up tariffs through other alternatives. So Greenland is actually an excellent replacement for tariffs because it keeps those EU and UK and other NATO allies incredibly focused on the US, willing to cater to the president's needs and wants, and they don't have to necessarily hit back with tariffs, which the domestic audience in the United States cannot stomach anymore. And those are the biggest reasons I think we're talking about Greenland right now.
Henrietta, how's it playing within the Republican Party these days, or just within Washington, this whole focus on Greenland? It seemed to come out of nowhere, and the president's not letting it go. Are there political ramifications? This is an election year.
You know, I've watched polling data and I've worked on elections from Texas to Rhode Island for 20 years now. I have never seen the American public so unified in opposition to a single item. I don't think this many Americans like ice cream or Disney World, you know? It's something like 83% of Americans oppose this Greenland move. That's a striking amount of unanimity and a pretty clear message to the president.
What does he do with that, though? What does Congress do with that? What does the Republican Party do with that unified opposition to Greenland, to the U.S. taking control of Greenland?
Well, I think it really speaks to the next phase of President Trump's political status in the United States, which is that we're moving into lame duck territory. I think we're already there. So what that means is you're not going to get much Congress this year that will advance the president's agenda. That's not abnormal. Very few presidents passed 2 reconciliation bills. Joe Biden was definitely an outlier in that regard, and he got 2 bipartisan bills done. I don't think that's an option for this president, you know, in this sort of scorched earth environment. So what presidents do in that scenario is they pivot to foreign policy. And that's what the president has been focused on for many months now, whether it is, you know, Israel, Gaza, or Venezuela, and now Greenland. And that's where lame duck presidents traditionally head to at the end of their term. So I know we have 3 years left of President Trump, but the legislative realities, particularly as we look forward to a midterm election cycle where Democrats are leading in the generic ballot, which is highly predictive of election outcomes, by 5 points on average. So the president is migrating into what is a very normal place for presidents to move into in their last couple of years in office, which is foreign policy.
I seem to have something in the back of my mind. You know, I spent the last week on a beach. How about the government staying open? Where are we on that?
Oof, we got some really good news on that front. The House is moving forward with the 6 remaining bills, even the very contentious Homeland Security package. And I'm very hopeful that they'll be able to clear the rule later on and get that sort of big package of 6 appropriations bills over to the Senate by the time they get back next week, and we can avert a shutdown. So I think we're on the right path with that one.
But there's no resolution on health care, right? Republicans have not come up with a way to make or keep healthcare plans affordable for Americans who do rely on the Obamacare exchanges.
No, there's no solution to the ACA subsidies. And again, I think that goes back to the president having a situation where Congress is not capable of passing legislation, so he pivots to foreign policy in lieu of domestic legislation. So an ACA subsidy extension, you know, my colleague Spencer Perlman has been on the contrary side of this for many months now, but is still proving accurate. There's just no way to get past the impasse Republicans have on the Hyde Amendment and abortion legislation, the income caps, the applicability of the ACA subsidies. There's just not a path forward at this time. The House has acted on a 3-year extension, but the Senate's not going to pass that bill.
Henry, had about 30 seconds left. Should we expect any legislation from this Congress in 2026?
I don't think so. My odds of a second reconciliation bill are inordinately low. I'm at 20%, and that's really trying to be generous. I don't see a path forward for material legislation this year. It's going to be keep the lights on. More bailouts for farmers, I think, are obviously coming. We'll get $15 billion added in this latest bill. That brings us to a total of $30 billion for farmers. We're going to try to keep doing that with the highway bill, with the farm bill, and those pieces of sort of must-pass legislation.
That is a sobering thought, given that it is January 20th.
Exactly. Done. I mean, it's just
there's a lot of time left in the year.
This has been a long year, hasn't it?
This has been a long year here in January 20th. All right, Henrietta, thank you so much. Appreciate the sober thoughts there on the expectation for legislation. Henrietta Trez, Managing Partner and Director of Economic Policy for Veda Partners. And again, as Henrietta said, this is typical for a president in the second term. Look towards, and you get towards, you know, a lame duck type of thing domestically, to look towards foreign affairs.
Right, where there's more unilateral power, and obviously he's leaving a lot of Europeans quaking as he makes all kinds of pronouncements.
Yeah, so he's, President Trump will be heading over to Davos and then speaking tomorrow.
8:30 a.m.
8:30 a.m. Wall Street time. Bloomberg will bring that for you, and it should be compelling as well.
Must listen, must watch.
Must listen, must watch from Davos. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
Good morning. Good Tuesday morning, I should say. Holiday shortened week here. And we began today's trading with a big sell-off in Japanese bonds. A lot of people are calling it a Liz Truss moment for Japan because there was concern about the fiscal sustainability of that country. There was a weak demand at a 20-year auction, and there's some spillover into the U.S. Treasury market as well. Mike McKee is here with us right now, and he is our go-to guy on all things international economics and politics as well. So, Mike, when you got up this morning, you came in and you heard about the sell-off in Japanese bonds. How does that relate to what we might see in the U.S. and what we have seen?
And what we have seen. Well, basically, what's happened is that with yields rising significantly in Japan, there is a sort of move to bring money back by Japanese investors move money out of other markets. We've seen the same in Europe as in the United States. And buy bonds while the dip is in place. The new prime minister has called an election, and to sort of goose the vote for that, she has suggested that she wants to cut taxes on food. And as we all know, Japan has the world's largest budget deficit, and that concerned people in Japan about what that might mean. But it's also true that where we saw the big moves, which was at the very long end, from 20 to 40 years, the 40-year moved 29 basis points. Huge
It's
move.
not liquid though, right?
It's not liquid, and it's a very thinly traded issue. And the same basically with 30 years. You're talking pension funds, and that's about it. So analysts aren't particularly worried in the long run about this. And then we've opened obviously down in equity markets because of the Greenland stuff. And so all of that feeds into it, but it certainly was a catalyst overnight for some solace among bond traders.
Treasury Secretary Scott Bessent criticized Federal Reserve Chairman Jerome Powell over his plans to attend a Supreme Court hearing regarding the president's attempt to dismiss a central bank governor. This sounds kind of juicy. What's going on there?
Over the weekend, the Fed let us know that Jay Powell is going to attend the hearing tomorrow, the arguments on whether or not the president can fire Lisa Cook as a Fed governor. Powell won't be saying anything. He'll just be sitting and watching because, of course, it's the Fed blackout period. It's also not in his interest to say anything, and it's not a forum for the Fed chair. But it is maybe a little bit of a thumb in the eye to the president. Now, as far as Secretary Bessent is concerned, we could point out that Donald Trump said he was going to go to a Supreme Court decision on tariffs not long ago, an argument on tariffs, and he did not. But what's sauce for the goose doesn't seem to be sauce for the gander there.
Dumb question. Are Supreme Court hearings televised or broadcast in any way?
The arguments are broadcast audio streamed, and you can go to the Supreme Court website and listen to the arguments.
But we're not going to get a TV cameraman pointing the camera at Jay Powell.
No, there's no cameras in the courtroom. We might see him if he walks up the Supreme Court steps.
Got it.
The cameras outside will get him. I give you some advice. If you want to listen to the arguments, you can, as I said, log into the Supreme Court website. But you could also look at C-SPAN, because what C-SPAN does is they put up pictures of the justice who's talking. And if you don't know the Supreme Court well enough to know them by their voice, you can figure out which one is actually doing the questioning at the time.
So what do we expect on this case? I mean, is this expected to go the way of supporting the president here or not so much?
The general feeling, and with the caveat that nobody knows what this Supreme Court is going to do for this president, is that the court seems inclined to carve out an exception for the Federal Reserve to the idea that the president can fire members of independent agencies at will. Right now, it's supposedly for cause. Now, the issue here is not specifically can he fire somebody, and so we'll be interesting to see what kind of decision we ultimately get from it. The issue is that the administration said they were going to fire her on allegations that she had committed mortgage fraud, but there's no evidence or proof or conviction that she did, and she's got to fight those charges. And the lower courts have ruled that she can stay in office while she fights those charges. And what the administration is specifically asking for is the ability to fire her in the meantime, to stay the lower court decision.
While it plays out.
Yes.
Are we going to get a resolution to this tomorrow, or is just they
No.
begin hearing arguments?
They're going to hear the arguments from both sides, from the administration side and her defense. And this could take weeks or even months. We might not even get a decision until, the court's final weeks in June.
And in the meantime, she is on the board of the Fed.
In the meantime, she is on the board until and unless the Supreme Court decides to issue a stay.
Boy, the Supreme Court's busy these days.
I know.
So we'll keep on top of that. Michael McKee, thank you so much. We appreciate that. Michael McKee, international economics and policy correspondent for Bloomberg News. We've got that decision. We've got the tariff decision coming from the Supreme Court, plus whatever is in their normal course of business before.
Right, exactly. But under this president, there's been a lot more stuff that they've had to really put on their table.
Exactly right. All right, so folks, for our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM channel 121, access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts in moments with the market selling off, but off the bottoms. But still, we are down substantially. The S&P off 1.1%. The NASDAQ off 1.4%. The Dow's off, let's call it 500 points. That's still a big number in my mind. That's off 1%. We'll have more coming up. This is Bloomberg. Good morning.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Tuesday morning. This is Bloomberg Intelligence with Paul Sweeney and Scarlett Fu. We're broadcasting live from Bloomberg's Interactive Broker Studio here in Midtown Manhattan. We are also streaming live on YouTube. We've got a lot coming up in this holiday shortened week. In the second hour of our program, we are going to speak with, or our team is going to speak with Brian Armstrong. Emily Chang is at Davos, and she will be speaking with the CEO of Coinbase. We will bring you there when it begins. We're also going to check in with Margi Patel. She's a senior portfolio manager at Allspring Global Investments to discuss her outlook for the markets. The S&P and the NASDAQ have just given up their rise for the year, although it is still early in the year. Mark Champion, he's a Bloomberg opinion columnist, will give us his take on Greenland, and his latest column is on how Europe cannot afford a throwdown over Greenland. And we will also be speaking with Sergio Armati, that is our Jonathan Farrow, is in Davos speaking with the CEO of UBS. But first, let's check in with John Tucker for our Bloomberg Business Flash.
All right, guys, major stock averages lower, yields higher, but all coming in just a bit off the worst levels of the session. And they make so much stuff that they're kind of like the bellwether. 3M's profit outlook fell narrowly short of Wall Street expectations for this year, a sign of some of the challenges the company is facing. Those shares right now down 7%. Brian Levitt at Invesco says, the current market action looks really similar to last April.
Yeah, it's the same analog where at some point, I think the direct quote about bond markets where they got yippy. And as soon as they got yippy, we put a 90-day pause on tariffs with China. And so the market started to form a bottom.
S&P 500 down 75 right now. The Dow 510 points lower. NASDAQ 100 down to 272. 30-year bond, the long bond, up 7 basis points. That's at 491, we'll call it. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Scarlett Paul.
All right, good stuff. Thank you so much, John Tucker. All right, let's take a look at some stocks on the move today. I'm Scarlett Fu here with Paul Sweeney, and we're joined by our one and only Bailey Lipschultz. Bailey, what do you have?
Yeah, want to look at one of the worst performers in the S&P 500, the worst performer in the Dow. That is 3M, ticker MMM. This came after the industrial company's outlook for the year. Adjusted earnings midpoint below what Wall Street was looking for. JP Morgan calling it mixed. One of the things that stood out to me looking through the analyst call and some of the results was kind of the CEO was pitching the maker of Post-its as reorienting it towards sectors that are hot. Think data centers. Bank of America, though, calling out that data center activity only accounts for about 3% of their revenue. So as much as you want to lean into nuclear facilities and data centers, things that are all the rage, not quite working out. So the stock down right now about 7.5%. Biggest drop since Friday of Tariff Day back in April. So pretty big move to the downside. Again, weighing on the Dow, also weighing on the S&P 500.
All right, what else you got for us here?
Looking at MicroStrategy, I imagine that's one of your favorites, Paul.
Sure.
Ticker MSTR, they are the Bitcoin hoarding company. So they announced that they bought more than $2 billion of Bitcoin last week. Michael Saylor kind of continuing to lead into that bet. The interesting thing is, seemingly when they buy, they're buying at the highs, and then we see the token pull back. So right now, Bitcoin trading just north of $90,000 per token. So when you go out and buy 22,000 Bitcoin and then see the price pull back, not really good for your bottom line. So strategy, ticker MSTR down again, more than 6, call it almost 7%. Biggest drop since earlier this year.
And we're going to talk about this and other crypto issues on Bloomberg Crypto today at 12 p.m. Eastern Time on Bloomberg Television. Last stock that you're watching, Bailey.
All right, Paul knows I love to talk biotech. So Immunity Bio, ticker IBRX, right now up more than 34%. This is a now $7.5 billion market cap. So this is a drug developer that had a positive meeting with the FDA regarding an application for its drug to treat bladder cancer. The thing, again, that's interesting for this company, not only is it up 34% in trading at the highest level since the summer of 2024, it's hurting short sellers. Shorts betting against the stock, about 36% of the shares shorted. So whether today is a positive move or really just shorts trying to cover their bets against the company, one bright spot in a day that's, for all intents and purposes, been pretty choppy for equity markets.
Again, another biotech stock moving. Again, it's either it's binary, thing works, stock pops.
It's a lottery
or it doesn't
ticket.
work. It's a lottery ticket.
And this is a stock that had a winning streak to start the year, was trading below $2 at the end of 2025, right now north of 7. So if you bought, again, took a lotto ticket on Immunity Bio at the end of December, working out pretty good.
All right, very good. Bailey, thanks so much. We appreciate that. Bailey Lipschultz giving us the stock movers here. For more conversations like this, subscribe to Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Check that out anywhere you get your podcast here. So we had some news out of Netflix here today. We're going to get some earnings after the close. I saw Geetha Ranganathan from Bloomberg Intelligence on Bloomberg Television earlier. So you want to hear about the earnings, but you want to hear about what they're thinking about Warner Brothers Discovery. They did amend their deal today to make it an all-cash deal. So I guess that makes it a stronger deal.
I guess it's an upgrade, but the question is, and you've posed it, why are they doing this on their own when Paramount Skydance has not raised their bid?
Yeah, I think most investors you talk to feel like, the bids need to be higher for this company, whoever ends up buying it. And presumably Paramount may be in a little bit of a weaker position vis-a-vis Netflix. And if that's the case, then maybe we'll see. So we'll stay on top of that one. Right now, let's head over to Davos. Brian Armstrong, Coinbase CEO, speaking with Bloomberg Television's anchor Emily Chang.
Largest banks in the world. It's not just a U.S. phenomenon. We're seeing incredible adoption of crypto in emerging markets where people have high inflation. And stablecoins are on a tear, not to mention prediction markets, et cetera, et cetera. So I do think that we're at a breakout moment for crypto, and yeah, it's a big opportunity.
So who is your second year in Davos, right?
Yeah.
Who are you meeting with? What are your priorities for 2026?
Well, we're meeting with world leaders to talk about economic freedom and how crypto can help update their financial system. We're meeting with central bank governors to talk about what they should do with stablecoins. But probably the most interesting group that I'm meeting with here are other bank CEOs, because we are having this moment in D.C. about getting market structure legislation passed. And the bill has made good progress. It got a strong bipartisan vote in the House. It's now being deliberated in the Senate. And there was a little bit of a blow-up last week. I don't know if
a little bit of a blow-up. All right, let's go there.
Yeah.
It seemed like a big blow-up, but you pulled your support for the bill.
For that current draft.
Yes. Why?
Well, there was too many giveaways to TradFi, if I can say that. Our view is that there should be a level playing field for this is allowed, this is not allowed, and then all the U.S. companies compete. And banks didn't like that. They were, in my view, like the commercial sides of these banks are very smart and the CEOs get it and they're talking to us about integrating crypto. The bank lobbying groups and bank associations are out there trying to ban their competition. And I have zero tolerance for that. I think it's un-American, it harms consumers, and the banks need competition, they need to innovate. We also saw this from some of the securities broker lobbying groups because, you know, tokenized equities are a big thing happening in crypto. So there was 3 or 4 kind of red line issues we saw in the draft text, and as I was in DC that day meeting with members of the Senate, I asked them, okay, is there a path to fix this after it comes out of committee? And they basically told me behind closed doors, if this comes out of committee with a bipartisan vote, we can't really help you on the full Senate floor. And so I felt like I had to stand up and say something defending our customers' rights. And I was careful not to opine on what the Senate should do in terms of a markup or not. And I was careful not to say anything. We don't represent the whole crypto industry, but from a Coinbase point of view, I was not comfortable with the draft text as written. And I'm glad that everyone came back for another round of negotiation.
Well, other people have been saying stuff. So since we're going here now, a journalist from Crypto in America said a White House source told her, this is President Trump's bill, not Brian Armstrong's bill at the end of the day, and that the White House is going to pull out if you don't come back to the table. You push back on this. What's really happening?
Oh, yeah, I mean, this is not our bill. I give all the credit really to the Senate, and certainly President Trump has said that this is a core part of his crypto agenda. So my impression is that the White House is fully leaned in here and wants to get something done, as do we, as do the bank CEOs that I met with today. So I'm not seeing any real barriers here. There's some people who are a little grumpy. I think they got caught off guard that we didn't support the draft as is, but it's kind of like that metaphor of, you know, 3 blind people looking at an elephant and everyone's trying to figure out, you know, there's probably somebody in the administration who had that point of view, but that's not the people we're speaking with. I don't think have taken that approach. They actually very much want to get this done.
Now, there's this ongoing fight about whether platforms can reward customers for holding stable coins, which Coinbase does. The banks have argued this is a deposit flight risk. Is that the real sticking point? And what do you think about the flight risk concern?
Yeah, so that's certainly one of the core parts of the debate. I think that some of the bank CEOs I've spoken with have kind of said, hey, we have this really high regulatory burden with being a bank, and what you're doing kind of looks like a bank, and so we think it's super unfair. You should have to have a bank license too. And what I tell them is, well, we're not doing something very important that you do. We do not do fractional reserve lending, which means, for those who don't know, you know, at a bank you deposit your funds. They're not keeping your money there. They're actually lending it out and earning interest on that, and then they pay you a very small percentage of that. Like the average savings account makes like 14 basis points or something. And that's called net interest margin, and that's the whole bank business model. And so that's why they have such high regulatory burden, because there can be a run on the bank. Like your money is not all there. In a crypto world, there's a 100% reserve. So all your money is there. It eliminates this entire category of risk around a bank run. No such thing is possible if there's 100% of the money there. And so we don't need a bank license. We're regulated by the SEC, the CFTC. We have a national trust charter. Like there's different entities, and stablecoin issuers can operate under these models as well. And so we've kind of said, we don't need a bank license. That's what currently already exists in the law. The Genius Act even enshrined that further. And so there has to be some other solution here. How do we flip the banks from thinking of this as a threat to an opportunity where we can all go win?
Let's talk about the,
all right, that was,
opportunity.
We got Emily Chang speaking with Brian Armstrong, who's a CEO of Coinbase. They're over there in Davos at Bloomberg House, which is a nice little setup we have over there where we get to sit down with some of the leaders that are over in Davos and speaking with Bloomberg. Let's stay in Davos. We can do that with John Farrow, Bloomberg Surveillance co-host. He's over there in Davos with the surveillance team. John, we saw your show this morning, a lot of great guests on here. What's the vibe you're getting there? It seems like, boy, overnight, President Trump has kind of flipped the script here and making it all about tariffs. What are you hearing?
Hey, Paul, I'll give you my vibe, and then I'll give you the vibe of the conference. The vibe for me is that I got the short straw. Why are they in a nice warm room, nicely lit, sitting there with no layers on, and I'm here in the freezing cold? I'm happy to see you, Paul. I'll give you the vibe from the conference. So it really depends on who you ask. If you ask a European official, behind the scenes, they're very nervous about what's developing with the President of the United States. If you ask a member of the WEF, they've spent months and months and months planning the agenda of this forum, and the President of the United States has just lit a match and set it on fire, because the only thing that matters is his address to this forum tomorrow afternoon. And if you ask a business leader, I would park all of that, Paul. Ask a business leader what they're excited about. They're excited about opportunity in America. I've mentioned this stat, Paul, a few times, and maybe you heard it a little bit earlier this morning. PwC did a survey ahead of this event. They surveyed thousands of CEOs from all around the world. The #1 destination for investment for this year, America, 35%. That's up from last year. Paul, take a step back and just think about that. Given everything that's happened in the last 12 months, CEOs are more interested, not less, about investing in America. And I think that tells you the difference between the state of policy and international relations and the state of business and investors for the months ahead.
So all the talk about sell America, de-risking from the U.S., maybe pairing your holdings in U.S. treasuries or U.S. stocks, U.S. assets as a whole, that's just talk for now? I mean, are you speaking with any business leader who's actually looking to move on that?
We're speaking to a couple of people, Scarlett, that are suggesting diversification is the way forward. I think we've all heard that cliche over the last 12 months. What we saw earlier this morning from a Danish pension fund is not unique. We've seen that from elsewhere. PIMCO came out, I think it was Dan Iverson, in a conversation with the Financial Times just the other week, talking about a multi-year process of de-risking from U.S. assets. But I don't think that has to mean the end of the performance for U.S. assets. We saw this conversation last April. The price action we're seeing play out in today's session is an echo of that, where you see equities down, bond yields up, and the dollar weaker. We're seeing that play out again today, but play it out through the rest of last year. Through the rest of last year, what did we do? We bought the dip in April and rallied aggressively into year end. I don't mean to underplay these issues, Scarlett. I think they're really important. And I think they're becoming increasingly important, not less. I think we should just highlight the fact that markets are being driven not just by that, but by other things too.
John, later on this morning, we're going to speak with Mark Champion, Bloomberg opinion columnist. He's got a column out saying basically Europe cannot afford a throwdown over Greenland. That's according to Mark Champion. Are you sensing any coalescence around a policy here, whether to fight back against President Trump and some of these tariffs? And Greenland broadly defined, or maybe not so much?
I'd say it's a case of good cop, bad cop, Paul. If you listen to the address from Emmanuel Macron, the French president, a little bit earlier, that was punchy, that was assertive. If you followed our conversation with the Finnish president, Alexander Stubb, I think there was a sense, at least that I got, that the Finnish president was trying to offer the president of the United States a bit of an off-ramp. He even offered up the idea that maybe the fact that some European nations were sending troops over to Greenland was a bit of a misunderstanding with the United States, that something else was happening there, and it wasn't about antagonizing the American president. These are all things that can settle out over the next several days or so. At the end of that interview, I asked the Finnish president for a forecast. Where will we be by the end of the week? He expects progress on Ukraine and expects the issues with Greenland to stabilize. And I think for many people at the forum this week, they hope he's right.
John, before we let you go, you'll be speaking with the CEO of UBS in just a few moments. What's the #1 thing you want to hear from him?
Can I have a couple of things? Can I do like 3? I'll do 3, Scarlett, if that's okay.
Please.
#1 is legacy, because he's been at the bank for such a long time, and it could be the last 12 months for him at the top of UBS. He's about to make his exit, so I would fold in the integration of Credit Suisse with that. #2, of course, is the expansion into America, which I think speaks to the themes you and I are discussing right now, which is that, yes, there's a lot of headline risk, but also people want to expand in the American economy. And #3 is what's playing out in financial markets, and not just treasuries. I'm talking about Japan. Not enough is being said about what is developing in Japan. A massive sell-off at the long end of the curve is spooking not just investors, but I imagine some Japanese policymakers too.
John, outstanding. Thanks so much. We appreciate getting a few minutes of your time. John Farrow, staying warm there. The Bloomberg, he's Bloomberg Surveillance co-host. He is in Davos, Switzerland. And folks, you can watch John Farrow, Lisa Abramowitz, and Anne-Marie Hordern on Bloomberg Surveillance tomorrow at 6 a.m. Wall Street time, live from Davos. They will have all the key decision makers there with some good conversations. Again, to see President Trump speaking at 8:30 Wall Street time tomorrow. Yeah. We'll bring that to you live as well. And that'll be, as John Farrow mentioned, highly anticipated.
Highly anticipated because, there was all this talk about, oh, we're going to focus on AI and what it's going to do for global growth, what it's going to do for corporate strategy. And instead, everything now revolves around tariffs and Greenland and the U.S. case for pushing Europe to give up Greenland.
And John's point just made me think, there's a whole bunch of people all around the world spending a year putting the agenda together.
Yes.
And then, boom, it kind of gets sidetracked.
It just got blown up completely.
So we'll stay on top of that. Markets continue their sell-off, but they're off the lows. S&P off 1.1%. This is Bloomberg Morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg News with this Bloomberg Business Flash. We're brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver information guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. S&P 500 set for its biggest drop since November, and to a large extent, you have yields in the driver's seat. 10 of the 11 major index groups in the S&P 500 down right now. Consumer discretionary, think Tesla, and information technology, think NVIDIA, worst performers right now. Energy, the only group that's higher as oil prices push up. And the Supreme Court did not rule on the Trump tariffs today, so there's probably going to be at least another month before a challenge to this policy is going to be resolved. Netflix reporting after the close of regular trading today, also changing its bid for Warner Brothers Discovery to all cash. And then Post-it maker 3M, well, they make a lot of stuff, but those shares falling after the industrial company delivered an outlook for this year's adjusted earnings per share with kind of a midpoint below what analysts were expecting. 3M shares right now, as a result, down 8.3%. The Dow down 575. S&P 500 down 79, pairing some of the earlier losses. The NASDAQ 100 down 283 points. The operator of the Sphere in Las Vegas,
the Dolans,
Jimmy Dolan,
planning to build a new venue in the Washington, D.C. area. This would be the second
Also
U.S. location. What's that?
Also a Sphere?
Yes, a smaller one.
Yeah, I get. Yeah, another Sphere.
Yeah.
The second location following success.
It's at the National
Was
Shore.
I not being clear? The new
I'm just trying to picture it in Washington, D.C.
There is a picture in our...
it's 6,000 seat venue. It's going to be located in National Harbor, which is Maryland, so that's about 15 minutes.
I've been there twice in the past year because we've had remote broadcasts from there.
In Vegas? Or
No.
Oh, down there. Oh, of
National
course.
Shore. Yeah, I know it well. So if you
Okay.
have any questions, tell me about the National.
Top grossing venues, one of the top grossing venues worldwide.
Yep.
So the Sphere.
I mean, if you went there to see a concert, it's something else.
Well, who's in residence there? It's U2, right?
No. They did the first concerts, but
Okay.
they weren't in residence.
Yeah,
the Eagles, are they still in residence?
Backstreet Boys also did something there.
Yeah. I had tickets to go see the Eagles at the Sphere. Unfortunately, I found out the day before that they were fake tickets, fraudulent tickets. Yes. And you wouldn't believe the amount I paid for those two tickets.
Oh, man.
What a bummer.
Yes. So that was,
that
I learned
hurts.
my lesson about
That
how to buy tickets
hurts.
online, So anyway, there you go.
Anyway, we check the markets and other stuff for you right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. And look, you see the wad of cash he carries around? He can afford it.
That one hurt. That one hurt. But now I learned my lesson, how to buy tickets online. Don't pick the first thing that pops up on Google when you go do like Google tickets for Eagle tickets. Let's get to these markets here, selling off here. But is this like what we saw last April, where maybe you buy some of the pullback here? Margie Patel, she's a pro. She's seen it all, folks. Senior portfolio manager, Allspring Global Investment. She's up there in Boston. Margie, you see a day like today, they're actually kind of rare in this marketplace where you get a 1.5% pullback here. What do you do on days like today?
Well, I think it's just a random short-term trading up and down. Doesn't mean anything. The market's really waiting for the earnings. We've started earnings seasons. We haven't had any of the Mag 7 names report, and I think that'll really set the keynote for what the market does. So this is just, I think, a little bit of nervousness in a news vacuum, really.
Okay, and again, as we get big tech to report, that will really set the tone. What kind of tone did the banks set? Because there was a lot of optimism heading into those results, and in fact, what we got was kind of a mixed bag. Certainly, the reception to their results was a mixed bag.
Mm-hmm. Well, that's true, but really the economy as a whole looks in pretty good shape. It looks like the fourth quarter should be around 3%, which is a little above historic average. And corporate profits in the third quarter carrying over look like they're going to be about 10%. So with those types of broad numbers, that says to me that the foundation for the equity market is pretty good, especially when we have the Fed pretty much on neutral to maybe cutting. So we think all those big factors are positive. And so we don't really see the market having much of a correction here.
Margie, what are some sectors that screen well for you? Is it, or do we continue to rely upon some of the big tech names and all that AI spending that continues to be kind of top of mind?
Yes, I think technology is still going to be a sector that's above average performance for the year because they simply have the earnings power and the earnings growth that a lot of other sectors don't have. But it's true, we've seen, particularly in the very large cap names, over the last, say, 4 months, PE erosion. So even though earnings were good last time they were reported, people are concerned about future growth, how much they're borrowing, what future cash flow going down. And so we've actually seen PEs come down, which is actually good for the group because it says there won't be like an elevator shaft drop in these names because they've already started to recognize somewhere down the road growth rates may decelerate or average PEs in the whole market may come back a little bit. So, a little bit of correction already has been going on in those stocks.
I got to ask you about what's been happening internationally, specifically, Margie, with the sell-off in JGBs and Japanese government bonds. It spilled over into the U.S., and I wonder if you see this also as just a knee-jerk reaction or if there's something more to this idea that Japan's fiscal problems are going to be longer term and could really lead to sustainably higher yields there, perhaps causing Japanese investors to pull back on U.S. investments.
Well, I think it's true no matter where you look at. All the developed countries have large deficits, large financing needs. The U.S. is an example of that also. And I think that says to me that if you look at treasury rates versus the equity market, the measures you'd use of relative value, how to price stocks based on treasury yields aren't going to work so well because I think we'll see treasury yields a bit higher than you would expect simply because there's such a huge supply. And also inflation is turning out to be rather more stubborn than the Fed had projected. So that says to me it's really the market, again, adjusting to the reality of a little higher inflation, a lot of government financing, and the fundamentals for the equity market are pretty good because they're not directly affected by that.
Margie, thanks so much for joining us. Always appreciate getting a few minutes of your time. Margie Patel, Senior Portfolio Manager at Allspring Global Investments up there in Boston. Over the weekend, Greenland became front and center once again. President Trump talking about levying tariffs on some of the European countries that are pushing back on some of the president's moves towards Greenland. Our next guest suggests maybe they should rethink that. Mark Champion, he's a columnist for Bloomberg Opinion. His latest column is entitled, Europe Can't Afford a Throwdown Over Greenland. Mark, thanks so much for joining us here. Why do you write that? How do you think Europe will respond or should respond?
Well, I mean, we can see that they are, so they're right in principle in everything that they say, that they've had enough, that Trump is using trade, for reasons that it really shouldn't be used. Is using it as leverage in order to basically break international law and demand that another country hands over sovereignty over a piece of territory. He has no good reason for doing it. He's given various reasons. They simply don't stand up. The U.S. can do everything that they need to do in Greenland without having to take it. They already have a treaty that allows them to do anything, more or less. So, the Europeans, the outrage is completely understandable. The difficulty is if they get into a trade war, like French President Emmanuel Macron is suggesting, that they fire this so-called trade bazooka that was designed for exactly this sort of purpose, where a foreign country is, misusing trade in order to pressure the EU. If they do that, as Trump has already shown, then he will escalate. If they escalate, they need to think of where they get to and whether they will be able to stay together and whether they will be able to resist. And the real problem here, and the point that I was trying to make, is these things are ultimately not determined by principle but by power. And Europe lacks the power. Trump has that leverage, not necessarily because of trade. If it was just about trade, the EU could probably stand its own. The real problem is that they are so dependent in terms of security. They care about NATO. They care desperately about NATO. He does not. They care very much about what happens in Ukraine, and that Ukraine should, that the Russian forces should be stopped in Ukraine and not allowed to go further west. He does not. So this is where they have a real problem.
And you point out that you're already seeing a splintering in that European defense or that rallying of European nations. Italy, notably, did not send anyone to Greenland to fight this kind of symbolic or to put up a symbolic defense against the U.S.'s goals for that island. How are you thinking of this divide and conquer strategy that the U.S. is employing? Or it's not really much of one? All it has to do is kind of poke holes.
Well, that's it. And if there is a kind of diabolical logic to what Trump is doing, I suspect that this is it. He's very much on the record as believing that saying that the EU is designed to rip off the United States. He'd like to see it dissolved. And trade is an area one of the few areas where the EU is truly united in terms of its, foreign international presence. So, the power to make trade treaties and trade policy is concentrated in Brussels, not in the capitals. So, he would like to break that down. It's much easier to deal with the UK or France or Germany or Denmark individually for the US than it is to deal with them all collectively. So, you can see a kind of logic to what he might be trying to do. But again, if he is, you cannot maintain an alliance that way. And unfortunately, the real risk for the Europeans is that they are not ready to give up that alliance. They still depend too much on the U.S. nuclear umbrella, too much on NATO, U.S. assets within NATO to have a kind of, a meaningful deterrent against fully militarized countries such as Russia or China. And it's going to be, they're 10 years away, at least, from being able to stand on their own in that sense. And that gives Trump a great deal of leverage in the short term.
All right, Mark, thank you so much for joining us. Really appreciate it. Mark Champion, he's a columnist for Bloomberg Opinion. Again, the column out today, really timely, entitled, Europe Can't Afford a Throwdown Over Greenland. And again, some of the rhetoric coming out of Davos, kind of mixed. John Farrell was mentioning in his interview with Alex Stubb, the president of the Republic of Finland, that they think they can work something out. Yet President Macron from France maybe taking a tougher tone in his speech at Davos today. So we'll see if some kind of consensus forms during the week.
There's definitely a good cop, bad cop routine kind of taking shape here among European nations as responses to what Trump is doing. I suppose Trump has left them no choice but to kind of go about this path, right?
Yeah. And I don't know, it was interesting, guys. I was listening to that interview with Mr. Stubb from Finland. I forgot that he does, in fact, have a pretty decent relationship with President Trump. And maybe that can be a conduit here. So again, we'll hear President Trump speaking at Davos tomorrow, 8:30 a.m. Wall Street time. We will bring that live to you, and that should be compelling to say the least. S&P off 77 points. That's 1.1%. More coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg newsroom with this Bloomberg Business Flash. Stocks extending the negative momentum seen during the holiday break as President Trump's threat to impose escalating tariffs on Europe over Greenland that continues to roil the global markets. 3M right now, the worst performing single stock in the S&P 500. Those shares down close to 8%. The profit outlook falling narrowly short of Wall Street expectations for this year. Meanwhile, the 30-year bond, it is yielding right now 4.9%. Still, Ron O'Hanley, president of State Street, says good reason for investor optimism.
I think that if you think about it, there's a lot of factors that are setting up the economy to be quite good, led by the U.S. So if you think about it, there's the big, beautiful bill.
And right now, the S&P 500 75 points lower. That is down 1.1%. So coming off the worst levels of the session.
Same extent in South Florida.
I think it's getting there.
Same extent in South Florida.
I think it's getting there. It's good stuff.
It's the weather or the tax policy?
Taxes.
Everything.
Taxes.
So there you go. Good for them.
Why are we still here?
Because we
You're
love
working on
the
your
change
house,
of seasons. The change of seasons.
Oh, yeah, that's it.
All right, John Tucker, thank you so much. We appreciate that. It is Scarlet Field and Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube. And in just moments, Bloomberg's Jonathan Farrow is going to sit down with Sergio Armati, the CEO of UBS in Davos, Switzerland. So that'll coming up in just moments, and we'll bring that to you. But that is interesting about the Wells Fargo. I just see more and more firms putting more and more people there and in Texas.
Right, and wealth management overall is something that all the big banks are really focused on because it takes away from the depending on capital markets, which is pretty volatile. As you know, just it's a smooth source of revenue, and profit margins are much higher in the wealth business as well. Morgan Stanley's James Gorman really spearheaded that and turned Morgan Stanley into this very safe kind of business in contrast to what it was before the financial crisis. And Goldman Sachs has taken a page out of that book as well. David Solomon is certainly moving towards placing a lot of emphasis on the wealth business.
Well, they talk about the the transfer of wealth from the baby boomer generation to the younger generations is going to be extraordinary, once in a ever type of scenario in terms of the total dollar amounts that need to be moved.
It's happening and it will be happening.
Yes. So it's a nice trend to play. And so, of course, what does Credit Suisse do before it went bankrupt? It gets out of the U.S. business. I mean, when Morgan Stanley was beefing up, everybody saw that was the future of Credit Suisse. Now let's get rid of the U.S. business.
Yeah, that was not great timing.
Yeah, and so my guy left, and so we had to go to UBS, and so that it's just the whole thing. Let's head over to Davos right now. It looks a little chilly over there, but there's a fascinating conversation right now. Sergio Armati, UBS CEO, speaking with Bloomberg's Jonathan Farrow. Let's take a listen.
Before we get into the bank, we're going to ease into this and start with financial markets. What a start to the trading week stateside. Equities open up, gap lower, bond yields higher, dollar weaker. We've seen this movie before last April, got over it pretty quickly. We've thrown a lot of this market in the last 12 months. It hasn't stuck. Is there something different about the way we're set up for 2026?
Well, I would say that it's probably the accumulation of issues that are now out there and not resolved that is becoming a little bit troubling in my point of view. So I think that this is the only major change. But we have to stay tuned for more volatility going forward and predictability and rapid changes. So I think that staying diversified in financial markets nowadays is pretty important.
And let's get to what that word means, diversify. It feels like that's a diplomatic way of saying Sal America sometimes, and I'm not going to put words in your mouth. I'll tell you what others are saying. PIMCO is talking about a multi-year period of diversification away from U.S. assets. We've seen from others moving out of U.S. Treasuries. There was a headline earlier on this morning about a very small Danish pension fund, and they've got their own issues in Denmark right now, given their relationship with America. What are you seeing develop?
Well, diversifying away from America is impossible. I think that in any major asset allocation, one could probably think about having an overweight or underweight, but diversifying away from the U.S. and also from the dollar is a quite dangerous bet. Things can change rapidly, and U.S. is the strongest economy in the world, the one who has the highest level of innovation. Right now is a little bit bumpy, but I would say that I wouldn't really bet against the U.S.
There seems to be a difference between how the politicians and the policymakers talk about America right now and the backdrop for international relations and how a business person thinks of America, the economy, and the opportunity. I've mentioned this stat a number of times already today about the survey that PwC put out. They surveyed 4,500 CEOs and the top destination for capital for investment, America, and it was up on last year. As a bank boss right now, a CEO, who's thinking about expanding around the world, why is US still top of mind for you?
Well, because from our standpoint of view, we see two big levers. First of all, wealth creation, GDP growth, innovations, and also more idiosyncratic to UBS is that we see potential for us to become more present, increase our market share. So that's one place. On the other end, we are also very big in Asia. I mean, we manage $1 trillion of assets there. We are growing very fast. The economy is growing. Half of the population in the world is living there and is creating new wealth. But, in the Americas, in the U.S., by the way, last year, the U.S. created 25 million of new millionaires. So basically 1,000 millionaires a day. So it's a place for a financial institution, a wealth manager like UBS is a place to be.
Well, let's talk about that. Is that something you want to do organically or through an acquisition?
I think that we have enough to do organically by doing better what we can do. We are enhancing our product capabilities. We just got a national charter application being approved by the OCC. We are expanding our interaction between the investment bank and our wealth management people. So I think that's more things we can do to get better and stronger.
It sounds like you're on the front foot. At the same time as the bells ring behind me, I'm reminded of where we are, Switzerland, and the issues on the horizon potentially for the bank, and that's capital requirements.
Yeah.
That feels like a cloud that's hanging over this bank right now. How quickly do you think we can resolve it?
Not quickly. I think it's a political process. Most likely we're going to find out the direction of travel, in the middle of the second quarter, and then it's still a political process. But you're right that this is something that has been quite distracting for us, although we have been quite successful in managing the integration of Credit Suisse. Is almost completed. We are almost 3 months to go, and then the vast majority of the job is done. So, but we look forward for a resolution also.
I'm sure you do. From the strategic standpoint, how is it holding you back? How is it distracting you? What are you prevented from doing that you would like to do right now?
At this point in time, to be fair, nothing, because executing the integration is the top priority. We cannot be complacent, although 85% is done. The last 15% is as important. We still need to take out $3 billion of cost and finalize the restructuring, and then we are prepared for growth, and that's the reason why we are investing top line, but also in efficiencies, AI, and how we can become better and stronger.
Where did the cost come out? Are you satisfied with the size of the workforce? Does more need to be done on that side of things?
Well, there is still, unfortunately, that's the more, a big chunk of the savings are going to come by disconnecting all the IT systems, data centers, but also there is also a painful still part of on the account, but it's within what we always announced. So, I think the direction of travel is set.
This is the top of the to-do list for you, and then someone else is going to step in eventually. You've offered your thoughts about where that someone might come from, that you'd like to see them come from internally, from within the bank. Are you open to someone coming from the outside?
Well, we always need to be open. I think the board is not, my job is to prepare and to present to the board as many candidates possible for internally, and the role of the board is to also evaluate external candidates and find the best solution for the future. But I would say the bank is very strong. My team is very strong, and I do believe that an evolution is what we need. Is probably not a revolution, but it all depends.
What's the timeline for that process now? Can you give us an idea? At what point do you present your ideas about who might succeed you?
Well, we always, every year, I present ideas, and succession.
You offer them next?
Succession is not a process that you do, only a few months or years before somebody leaves. Succession is something that we manage every year. From my standpoint of view, we need to be just prepared to have the best person for that moment.
When that person is selected, there is another seat that might open, and it's the chairperson's seat. And I just wonder, when you step aside as CEO, has the chapter truly closed for you and the bank?
Well, look, right now I'm very focused on finishing my job. Honestly, I think this is still very intense activity, and then it's going to be, I need to reflect.
You realize people watching this won't really believe that? Well, you are a human being, you'll be thinking about the future and what comes next.
But people watching, they are not expecting me to respond.
That is true as well, particularly this gentleman right here, who wants that response from you. Just a final question from me. I believe you first took the job as CEO back in 2011. As you look back on things, and I think this is the appropriate time to begin to think about this, your legacy at the bank, I'm not sure you ever really thought that we'd end up here integrating Credit Suisse in the circumstances we did. But how would you like your legacy to be remembered as the leader of UBS?
I was very proud. In a tragic moment for Switzerland and for the banking industry, I was very proud in 2023, when 2 years after I left, that UBS was asked to step in and stabilize and help stabilizing Credit Suisse and being part of the solution. That was for me, almost reaching what I always thought I wanted to show with our transformations in the first period. Right now, I think that we have a solid bank, a stronger bank than before, and I believe we are set for growth. So the legacy is always to see that when you leave, after a couple of years, things are going even better.
Sergio, it's good to see you. Thanks for making time for us.
Thank you.
We'll get you.
All right, that was UBS CEO Sergio Armati speaking with Bloomberg Television's Jonathan Ferro in Davos, Switzerland. UBS, Mr. Armati saying they've got enough to grow organically in the United States, and they're committed to continuing to invest in the United States, and they feel good about where they are right there in their turnaround there after digesting Credit Suisse a couple of years ago. Markets continue to sell off here towards the lower end of the trading range. S&P down 90 points, that's 1.3%. The NASDAQ down 360 points, that's 1.5% there. So again, a sell-off here. And on the yield space, 10-year Treasury yields up about 5 basis points, 4.27%. Well, Netflix back in the news today. They're amending their offer for Warner Brothers Discovery to an all-cash deal. It was cash and stock, now going all cash, believing that will strengthen their bid. They've also got earnings there for the close here. So a lot to talk about on the Netflix front, which means we want to check in with Geetha Ranganathan. She covers all the media stocks for Bloomberg Intelligence. She's based down in Princeton here. So Geetha, what did you make of Netflix today kind of amending their offer to an all-cash offer?
Yeah, so this really, Paul, puts to rest this ongoing investor debate about whether, the Paramount $30 all-cash bid for all of Warner is really, in fact, superior to Netflix's bid, which is a combination of both stock and cash, especially since the value of Netflix's stock has been declining now for many months. So I think what Netflix really aims to do here is to first of all, to show David Zaslav and Warner Brothers Discovery shareholders the money. So they're going all cash, and they're basically saying that we want to really get this deal on a fast track here, because this will speed up the shareholder vote. It will now happen sometime in April. It was previously supposed to happen sometime in June. So they're really kind of getting going here and, putting the money where their mouth is,
First thing when I saw this news this morning, Geetha, I put my own banker hat back on. I said, boy, it seems like Netflix is bidding against itself, because we haven't heard any kind of counter bid from Paramount here. What do you think's going on behind the scenes with both of these bidders?
Yeah, so, Paramount, obviously, they've been constantly insisting, about the superiority of that $30 all-cash offer. With Netflix having changed its bid to an all-cash bid, I think the ball is now squarely in Paramount's court. They have to increase or sweeten their bid. One of the things, Paul, that has been constantly debated is the value of the TV networks. That is the remaining portion of the business that Netflix will not acquire. So this will be spun off by Warner Brothers Discovery. Paramount has argued that those TV networks are actually worth nothing. That's what they've said, and they've based their argument kind of on the performance and the valuation of Versant, which was the Comcast cable network spinoff. But Discovery actually put out a filing today, and it basically suggests that, of course, there's a huge range for those cable TV networks, but they value them anywhere from about $1.50 a share to as high as $7 a share. And they kind of lay out many different scenarios, basically suggesting that, some of those networks, like a CNN, like some networks, international networks in Poland, could actually be sold. And, a lot more shareholder value could be extracted, so to speak. So I think Warner Brothers still believes that the spinoff of the cable networks will actually bring it more value. And this is why they're kind of leaning towards that Netflix offer.
What's the timing here, Geetha? Do we wait until the shareholder vote until April, or do we expect something to happen? It seems to be dragging on here a little bit.
Yeah, it is. So actually, tomorrow is a very important day, and I say that because tomorrow is the deadline for the Paramount tender, which is the $30 tender.
Yep.
So expect something to happen. Either Paramount extends that offer, or they basically have to sweeten the bid. So something definitely should have happened tomorrow. If nothing happens, then we'll have to wait and watch and see, what happens now on the regulatory front, because now that we have all the financial terms in place, I think the next big question mark is obviously what are the regulators going to say about this deal?
And what's the early thinking there?
So it's a little bit of a mixed bag here, and it's going to be really interesting to see what Netflix actually does. So they've kind of laid out many different arguments, which should, I think, kind of soothe regulator fears, kind of not have too much of regulatory scrutiny. So they've said that they're going to maintain the HBO business. They're going to maintain the theatrical business. These were all big question marks when they initially announced the deal. One of the big things that we are kind of looking for tonight when Netflix reports earnings is what their stance is going to be on price increases. So the last time that they raised prices in the US was last January, so exactly 12 months ago. And typically they have this cadence of increasing prices every 12 to 18 months. So it's going to be interesting to see whether they are going to take that chance and go ahead and raise prices, or in fact stay away from raising prices, thus making the case to regulators that they're more pro-consumer, and they're kind of especially when the deal is kind of in regulatory crosshairs. So a lot of things here still kind of waiting to unfold, Paul, but it's going to be a very different process here in the US, where it seems like that regulators might give Netflix a green signal, but I think it's going to be much tougher for them in the EU, where they do have much higher antitrust issues.
30 seconds left here, Geetha. The company Netflix is reporting after the close here. Aside from this deal flow, what else are you looking for?
I think the number one thing that everybody is going to look for is revenue guidance for 2026. I mean, one of the things that the concern that it raised is revenue growth going to slow? Is revenue growth slowing? Is that why they bought Warner? And so anything below 13%, 13% is the consensus number right now, anything below 13%, not good for Netflix.
All right, Netflix reporting after the close. It used to be this was like the seminal event, or one of the seminal events in earnings season. Now, for Netflix, it's all about this pending deal for Warner Brothers Discovery. Again, huge ticket. Enterprise value, Warner Brothers Discovery, all in, about $90 billion. That's Geetha Ranganathan. She is the media analyst for Bloomberg Intelligence, one of the best on the street. She's fully versed in what's happening over there at Netflix and Warner Brothers Discovery, Paramount. One of the things that the question I have is, okay, if Paramount does not get Warner Brothers Discovery, what does it do as a standalone company? Who knows? For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. Your top stories and global business headlines are coming up right now.
This is CBS News on the Hour, your home for original reporting.
I'm Steve Kathan. Key case before the U.S. Supreme Court as justices hear a challenge to a state gun law.
The justices are considering whether Hawaii may prohibit people from carrying firearms on private property that is open to the public, unless the owner explicitly gives permission allowing it. Justice Elena Kagan says this is really a property case.
Yes, gun owners are going to be affected because the property owner says, no, I don't want you to bring your gun on, but that doesn't mean it implicates their Second Amendment rights.
But attorney Alan Beck argues
Presumptive ban clearly implicates the Second Amendment.
Stacey Lynn, CBS News, Washington.
The European Union's top official today described President Trump's planned new tariffs over Greenland as a mistake and called into question Trump's trustworthiness. CBS's Weijia Jiang.
We know that world leaders have been texting him, including the president of France, Emmanuel Macron, saying, I don't understand what you are trying to do with Greenland. There are so many NATO members who are wondering just how far President Trump is willing to go when it comes to fulfilling his goal of overtaking that island.
A new government move could slow the visa approval process and cause some athletes and fans who come to the U.S. for the World Cup from visa-free allied countries to go through additional steps to enter the U.S.
Los Angeles Mayor Karen Bass recently praised a Trump administration decision to waive visa restrictions for 42 countries. But now a turnabout. Homeland Security wants athletes to submit 5 years of social media history before they'll be allowed into the U.S.
When they banned immigration, there was a caveat. If you are coming to the World Cup, you're not going to be banned. This is about making sure that the American people begin to normalize military intervention.
Craig Figner for CBS News, Los Angeles.
Country from the Great Lakes down to Florida caught in a deep freeze with bitter wind chills in the single digits or below in some places. In Hamburg, New York, there's a lot of snow.
We had a ruler and we put it in the snow, a 16-inch ruler, and it disappeared.
We're hearing from David Beckham after his 26-year-old son Brooklyn's outburst on social media, blasting his parents, claiming there was an effort to try to ruin his 2022 wedding. David Beckham on CNBC said it was a mistake to air it online.
They make mistakes. Children are allowed to make mistakes. That's how they learn. So that's what I try to teach my kids.
And checking Wall Street, right now the Dow Jones Industrial Average down 500 points. The S&P is down 78. This is CBS News. For the first time in a long time, a familiar name will not be in the NBA All-Star Game's starting lineup.
Flush. LeBron didn't get enough votes to start. That ends his record 21 All-Star Game streak. The 41-year-old Laker could still be part of the weekend. His teammate Luka Doncic will be among the starters for the Western Conference, along with Steph Curry, SGA, Nikola Jokic, and Victor Wembanyama. Starting for the East, Jalen Brunson, Giannis Antetokounmpo, Jaylen Brown, Tyrese Maxey, and Cade Cunningham. The game is set for February 15th. Deborah Rodriguez, CBS News.
In Australia, there have been 4 shark attacks along eastern beaches of the country. In a span of 48 hours, officials call it unprecedented. Dozens of beaches have now been closed. I'm Steve Kathan, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
And 1 year later, it's the president versus the world. Welcome to the Tuesday edition. As President Trump marks his first year of the second term by threatening new tariffs on our NATO allies for opposing his designs on Greenland. We're going to get the latest from Bloomberg's Tyler Kendall. Our Washington correspondent is with us. And we'll have insights from our own Christina Ruffini, with the president now set to bring his message to Davos. He is wheels up tonight. Less than 2 weeks until the government runs out of money, unless there's a funding mechanism. We'll talk it out with Nathan Dean at Bloomberg Intelligence. We'll have analysis from our political panel. They're with us for the full hour today, Rick Davis and Jeannie Shanzano. And it's all after a look at Wall Street, feeling a little wobbly today. Charlie Pellet has the latest for us on the Tuesday. Feels like a Monday session. Charlie, how's it going?
Right now, we are looking at a move lower, decidedly lower for the Dow, the S&P, NASDAQ. We are off session lows, but still a decline right now of 82 on the S&P at 68.57, a drop right now of 1.2%. Just as importantly, the S&P year-to-date now showing a loss. Dow Industrials down 5.17, down 1%. And again, NASDAQ lower by 1.3%, with the NASDAQ 100 index down 1.1%. Broad-based selling, your 10-year 4.27%, with the 2-year right now at 3.59%. Spot gold trading at a record $47.50 the ounce. The precious metal up 78, up 1.7%. Interestingly, silver not moving higher as well, down 0.6% right now, 93.85 for an ounce of silver. But crude back above 60.62 a barrel, up by 2%. Stocks, bonds, and the dollar all falling after President Trump threatened tariffs on various European countries before high-level meetings in Davos, amid a growing standoff over his ambitions to take over Greenland. Former White House economic advisor Gary Cohn says he does understand the president's ambition.
I think what we've seen evolve in the Trump presidency is this desire to negotiate and get a deal. So ultimately, is Greenland all about getting a deal? We know that the North Atlantic is becoming much more of a sought-after territory from a militaristic standpoint. So I understand the president's concern to have a military presence and protection of the North Atlantic.
Gary Cohn speaking with Bloomberg surveillance from the World Economic Forum at Davos, Switzerland. Meanwhile, Treasury Secretary Scott Bessent is criticizing Fed Chair Jay Powell over his plans to attend a Supreme Court hearing regarding the president's attempt to dismiss a central bank governor. Again, recapping, we've got the Dow, the S&P, NASDAQ very much in the red right now. 81-point drop on the S&P, drop there of 1.2%. Balance of Power continues right now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, thank you. With 3 days to unpack. My God, we can't take these Mondays off, but it was really nice to have a long weekend, and I hope you did as well, with a good MLK Day here as we launch ourselves into year number 2. Welcome to the Tuesday edition. I know it feels like a Monday here on Balance of Power. Bloomberg Radio, we're streaming live on YouTube. That part hasn't changed. Search for us, Bloomberg Business News Live, to catch our live feed here from Washington, D.C. A spirit of dialogue is how they're calling the World Economic Forum's 56th annual meeting. Half the shop is over at Davos right now. We're still ensconced here inside the bubble